to look constructive on consumer discretionary.
Alan, one final quick question. The divvy yield on the FTSE, 4% plus. The problem is now that has got to compete with credit and with bonds. Do you think it still stacks up?
You're right. I mean, effectively, the discount rate's gone up, or the alternative risk-free rate's gone up. The difference is, obviously, we are still looking at companies that are growing their dividend, as opposed to a bond where clearly the dividend growth or the coupon growth isn't there. So I think we've still got companies like the oil companies, like the banks, that we think will continue to grow the returns, and also got the option for buybacks. Buybacks are continuing to pick up a pace in the UK. They will clearly form part of the shareholder return profile in 23. So I think there are a lot more levers to pull than just comparing it directly against the bond market.
Alan, always great to catch up. Thank you very much indeed. Alan Custis, Lazar's head of UK equities. Greatly appreciated. We're wrapping up the session, wrapping up the Monday session here in Europe. We've been kind of drifting down throughout most of the day. These are the final numbers that we're seeing posted. DAX down by around 0.5%. CAC down by 0.7%. Tick lower during the auction, taking us certainly to the bottom end of the range that we've seen throughout most of the afternoon, but still positive for the FTSE 100. Much to discuss on the cable show this evening. We need to get into that energy story with the energy price cap and the sanctions being imposed. We'll do all that a little bit later. At 5 p.m. here in London, 12 p.m. over in New York. Podcasts available a little later, Spotify and iTunes. Alex.
Apparently Guy got his tree this weekend, so we'll definitely also talk about that. All right, coming up. Most Russian crude oil exports to Europe are now banned as Putin's war in Ukraine enters its 10th month. We're going to take a closer look at the volatility in the global oil markets and where the flows are going to go with Louise Dixon, senior oil analyst at Rystad Energy. This is Bloomberg.
Of your babies. I don't know if I'm asking you to choose amongst your children, but you know, some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy in 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like. But the more you could be you, the happier you will be.
Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. In the UK, the Rail Workers Union has rejected an offer aimed at ending a strike action planned before Christmas. Workers would have received 4% pay hikes this year and next, but the RMT union says that was conditional on a number of changes, including job losses, reducing staff on board trains, and closing all ticket offices. In Germany, the government says it will probably miss its goal of spending at least 2% of economic output on defense this year. A spokesman for Chancellor Olaf Scholz blames red tape and production issues. He said Scholz remains committed to reaching the NATO standard by 2025. And the European Union and the Group of Seven have begun imposing their cap on Russian oil prices at $60 a barrel. The Kremlin is working on a response and says it won't recognize the rules. The French finance minister calls the cap a worthwhile effort.
We will make an assessment of the efficiency of the oil cap by the beginning of 2023, but it's worth trying with the view of reducing the Russian revenue from oil.
There are questions about how effective enforcement of the cap will be. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
Hi, Ritika. Thank you so very much. To stay on oil for a moment, OPEC Plus keeping oil production unchanged as EU sanctions on Russian crude get underway, and that price cap gets underway as well. Last hour, we spoke with Hagar Chamali, Greenwich Media Strategies CEO and founder, and a former Treasury senior sanctions policy advisor about the implications.
Russia oil sanctions so far have not yielded the results that the international community has desired. And the reason for that is that other buyers, China, India, largely Turkey as well, have come in to buy Russian crude at a very cheap price. And so Russia is continuing to produce, and they're continuing to benefit from those proceeds.
Does that change? Let's get more insight now with Louise Dixon, a senior oil analyst at Rystad Energy. This is long coming. India, Turkey, China have been preparing for this. You also have Russia has been preparing for this. Where does the execution go from here, Louise?
Hi, Alex. Thanks for having me. Essentially, yes, a lot in terms of the implementation of the price cap itself will largely guide where we see the markets going in the early first quarter of 2023. But for now, as mentioned by not only our research, but by the market itself, and the buyers are saying there are a lot of bargain hunters on the market, and there is a lot of capacity for Russian crude to be picked up by importing countries that are not necessarily party to this price cap.
Louise, does this effectively create a price floor for other oil contracts, Brent, WTI? Is that going to be one of the unintended consequences here?
Essentially, yeah, arriving sort of at the $60 price cap. I think we can kind of think of it not as a hard cap or as a hard ceiling. In the early literature discussed by the EU before actually passing the legislation was that there would be a constant revisiting of this number. So sort of like OPEC, we can kind of look at it a bit as a moving target. And however it is important to actually note that Urals is not the only type of oil that Russia is selling. So while the Urals may be slightly below this price cap, there's other types of Russian oil, such as the Eastern Siberian blend, which is a bit more of a medium sweet versus the heavy sour Urals blend. And this is actually being exported east to northern Asian markets. And this is actually above the so-called price gap. So it's a bit of a moving target, and it's going to have different consequences on different.
So to your point about the different types of crude, is it just the Urals that's going to be under this price cap, or is it going to be all Russian liquid, just not product?
It's all Russian liquids. So while it's mostly aimed at the Urals, which is exported to the European market, there are going to be attempted price caps at these other sort of blends that are, more oriented towards Asian markets as well.
So there will be, in effect, a negative effect on Russia. How do you think the Russians are therefore going to react?
Well, I think that's sort of why we saw a bit of bullishness in the flat price as well as the futures price today. And that is that we don't really know how Russia's going to react. And I think in the past, the past nearly 9 months of war in Ukraine has shown that Russia's really sort of digging their heels into this position. And this is going to just add further volatility in the coming weeks and months.
So then, to that point, what winds up happening to the product market? Because that's where Europe is really vulnerable, and that's not included to any of this. So I'm wondering how we're going to be looking at that part of the market, and are we going to have to look at caps and restrictions on that coming down the road? And how do you even know that? Like, how do you know if that tank of gasoline is blended with Urals or not?
Right. So we don't see as much of a problem for Russia continuing to export its crude, as there are a lot of buyers on the market that would like to bring in Russian crude to refine in their domestic refineries and then potentially either keep at home to satisfy domestic demand or send abroad at a premium. But where this pinches the most is, of course, to European refineries. So we've already seen, I think in terms of seaborne exports from Russia to Europe, we've seen a drop from about 1.5 million barrels per day to about 500,000 barrels per day. And this is mostly hitting, again, these European refiners. Again, they will just have to find pricier alternatives to fill these refineries. But then the big unknown, Alex, you're correct, is the products market. So this is not as liquid of a market, and Russia doesn't necessarily have the transportation logistics to reroute these barrels. So for Russia, what that's going to mean is it's one thing if crude gets sort of stuck on the market, but if these products hit a bottleneck, then that's going to have really big impacts on Russia's downstream infrastructure. And as we know, they don't really have the storage to deal with this. So this is going to actually lead to more serious implications in potentially upstream shut-ins.
Louise, Russian rigs have historically been quite inefficient. Does Russia have any capacity here to reduce its cost of production? Is that something it can do with the current sanctions regime around the country?
Well, as it is currently, Russia's mineral extraction tax is quite high, meaning that the government is taking quite a bit of revenues from the oil and gas companies. So this has created a bit of a difficult, let's call it, investment climate. And then again, with the exit of most of the majors having lost all the technology input, of course, this is another downward lever on this potential production expansion. However, that said, and which was the case in the 2014 sanctions after the invasion of Crimea, there are other players that come into the market. So we could see non-Western oil and gas companies come in and offer the tech know-how to develop some of Russia's resources, which we know, of course, are very vast, but don't have the necessarily investment dollars behind them at the moment.
Louise, great to catch up. Really useful insights and analysis as to what is happening here. Louise Dixon, Rystad Energy Senior Oil Analyst. Thank you very much. This is Bloomberg.
incredibly difficult for all types of companies to find employees lately. Many people with disabilities who aren't working could be working if only given a job. About 20% of people with disabilities are employed.
Right now, we're in an environment where there is a war on talent out in the marketplace. Every employer out there is struggling to find people to come into their shops and to find good, hard-working, dedicated employees. We have found through this program and other ones like it that we have within the organization that these individuals are looking for meaningful employment.
People with disabilities want to be able to live, work, and recreate in the community the same as everybody else.
Many of us identify ourselves right away by our job title. That's an important part of our image of ourselves. So that's true for all of us, whether or not you have a disability.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
All right, stocks are on the lows of the session. We got the ISM services number at the top of the 10-hour. We're now down by 1.3% on the S&P, and volume's also picking up as well. Abigail, do a little tracking those moves. Abby?
Yeah, so we have that old story, bad news, or excuse me, good news is bad news, because it means that the Fed may have to raise rates more or pick up the pace or maybe a higher terminal rate. Who knows? We'll find out more during the Fed meeting next week, I believe it is, or maybe it's the week after that, the Wednesday. The S&P 500 right now down 1.3%, down a third day in the row. NASDAQ 100 down 1.2%, which is interesting only because you can see that the Bloomberg Dollar Index up about 0.7%, yields higher too. That 10-year yield up about 9 basis points. Typically, higher yields would press more on technology. That's not really the case today. It's a more evenly spread out decline, if you will. Now, as for the year, something interesting is happening this year, which is S&P 500 strategists, or strategists on the S&P 500, they agree for the first time since 1999 that we are looking at a decline for the S&P 500 on the year. The year-end target shows a decline, or excuse me, for 2023, a decline of 1.5%, which is sort of a big deal, although it's interesting to see that we're looking at an increase of this year. Maybe some of these strategists need to get up and do some, get to work and do some housekeeping sooner rather than later to figure out where this market's going, considering that we have less than a month to go. Where we do know where we have some direction, consumer retailer VFC Corp, home to a number of apparel brands, including Calvin Klein, down 8.3%. Not a great quarter. Weighing on the space, and this is one of the ongoing stories within retail, Guy, between the staples doing pretty well and some of the discretionary, not so much.
Not so much. Abigail, thank you. Latest on the markets. What's coming up, Alex?
Well, we have the Georgia runoff, so that's definitely what I'm looking forward to earlier today. And then coming up, Representative Brian Stile of Wisconsin will be joining Balance of Power with David Weston on Bloomberg Television and Radio. And Guy and I are headed to radio as well. Check us out on the cable. This is Bloomberg.
Gen Z can't seem to get enough of Prada. Loafers, nylon bags, and its Miu Miu micro mini skirt have been flying off the shelves into and onto the arms of young consumers. Fashion tech company Lyst placed Prada second on its fashion index, at its highest ever ranking. So what could be making this over a century-year-old fashion house appealing to a new generation of consumers?
What Prada has navigated adeptly is their overall kind of understanding of how cultural conversations are happening online, their ability to partner with various cultural figures.
Gen Z faces are at the front of Prada's advertising to this new market. Maya Hawke, Hunter Schafer, and Sydney Sweeney will be familiar to any fans of Stranger Things or Euphoria. There could be another factor at play, the environment. Of those surveyed by The Lancet, over 59% of Gen Z said that they were extremely worried about the climate crisis. So, for example, the revival of Prada's iconic nylon handbag using eco-friendly materials may be winning kudos among these shoppers. Of course, Prada and Miu Miu are not inexpensive brands, and as the global cost of living crisis hits, these brands might start to feel a pinch. But, for now, Gen Z seem to be reaching for their nylon handbags and not letting go.
There's got to be a one way or another to fund the government. There's really two ways, as you know, David, right? We could do a continuing resolution, which is what we call just continuing everything as is, or we could do what we call an omnibus, where we sort of reconfigure things.
To the world of business.
We just have this really on fire job growth, and we're asking ourselves where the workers going to come from. I think this report overstates how strong the labor market is.
This is Balance of Power with David Weston.
From Bloomberg Studios in Washington, D.C., to our television and radio audiences worldwide, welcome now to Balance of Power. We are in Washington right now, and there's a lot going up on Capitol Hill, even as we approach the end of the year, with work yet to be done. And to bring us up to speed on exactly where that is, we welcome now Bloomberg government congressional reporter Jack Fitzpatrick. So, Jack, thanks so much for being with us. My impression is Congress works best on a deadline. They do have something of a deadline, do they not, on funding the government?
Yes, the end of the day next Friday, December 16th, is the deadline. I've talked to the top negotiators and the people who are supposed to be writing the details of the bills. They do not seem like they're going to meet that deadline. They tend not to sort of wave the white flag until a bit late, but there's already a bit of a discussion about kicking it and how far they kick the can. It may be a short stopgap measure to take it right before Christmas. There's a little bit of hardball being played by Republicans who say, we're going to have House majority in January. We could do a stopgap into January and give ourselves more leverage. So there's actually more of a debate right now over how long they extend that deadline, because it doesn't look like they're going to make it on December 16th, rather than actually writing the bills, because they haven't agreed to the basics of how much to spend on defense and non-defense.
Jack, you heard there in the open to the program, Senator Pat Toomey, a Republican from Pennsylvania, who talked to us on Friday and said, look, we can do continuing resolution, which would be shorter, just sort of kicks the can down the road, or we can do an omnibus, which takes care of a lot more. Is there any realistic prospect of the larger package in the lame duck?
There is still the opportunity for the big omnibus that gives everybody the things they really want. Nobody would be happy with a longer stopgap, but the omnibus is a possibility. That's why, there's a bit of discussion about Richard Shelby, the top Senate negotiator on appropriations, saying we could be here right up until about Christmas to try to get an omnibus done before the end of the year. It would be a tough thing to kick it into the next Congress and go to new Republican House leadership even though they may want the votes and say, well, now you have a deadline early on in your tenure as Speaker, if Kevin McCarthy becomes Speaker, that would be a really significant challenge. So they're keeping alive the idea of an omnibus that gives everybody a good compromise, fully funding the government this year. But the challenge is that they are not close to a deal right now, and the 16th is coming up, so they've got to have a conversation about, do you buy an extra week, or do you potentially give up and go into the next year?
Okay, Jack, always great to have you with us. That's very helpful. That's Bloomberg's Jack Fitzpatrick reporting. He covers Capitol Hill for us. Let's turn now to one of those people that may, I just heard, have to be there until Christmas Eve. He's Congressman Brian Stile, Republican of Wisconsin. So, Congressman, thank you so much. Always a pleasure to have you with us from Capitol Hill. So what is your take right now on this funding the government issue? Omnibus, is there any realistic prospect for that? And is that better governance if you can get it done?
We should not be here in the first place, and we're looking at two bad options in front of us. Nothing moves Congress like a deadline, but there's no deadline like Christmas Eve. And so I'm concerned we're going to see another 1 week short-term kick the can down the road. One of my big fears is a giant lame duck omnibus with big spending numbers coming forward. That's exactly the opposite of what we need to get this economy back on track.
So, Congressman, take us into that, a little bit of the weeds here. As I understand it, there's a difference, surprise, surprise, between Republicans and Democrats. Republicans want more spending for defense. They don't want to increase some of the discretionary because they say that's already done in the Inflation Reduction Act. On the other hand, the Democrats say, let's increase it on both sides. Is that the basic issue?
That's one of the two big issues. The other is, I think everyone knows, Republicans' hands are going to improve dramatically come January 3rd when Republicans take away the Speaker's gavel from Nancy Pelosi in the House of Representatives. And so I think we really need to control this discretionary spending. We need to make sure we are strengthening our military, but the negotiations in front of us change dramatically, not only with a Christmas deadline, but the potential to really change the negotiations come January 3rd when Republicans are in control in the House.
Another issue you know very well, Congressman, is the Defense Authorization Act. Is that on a different track? Do you need to get that done before the end of the year?
I would really like to see us get that done before the end of the year. It's so important that we make sure our military is in a position of strength. We continue to see a whole host of global challenges from Russia to Iran to communist China. And so getting the NDAA across the line, that's historically one of the few bipartisan bills that gets done every year. I'd like to see us get that done as well.
Congressman, you said there'll be a dramatic change with the new Congress because Republicans will have a majority. Maybe not quite as dramatic as a lot of Republicans thought it was going to be because it's going to be a pretty narrow majority. Give us your sense right now on the leadership race. We know Kevin McCarthy really would like it badly. It was thought that maybe it was pretty likely that would happen. Now we've seen some challengers to him.
Yeah, I think ultimately at the end of the day on January 3rd, Kevin McCarthy is going to have the votes and will become Speaker of the House. This is a long family car trip that we're having right now. There's going to be some tough conversations in that start of that car trip. But I think by the time we get to January 3rd on the floor of the House, Kevin McCarthy will have the votes to be Speaker.
How much fun will that job be? I mean, it's a practical matter, given the very narrow majority. I mean, the Democratic caucus has shown it can be fractious. I think the Republican one can be as well, can it not?
Yeah, well, imagine bringing 221 of your relatives over to Thanksgiving for a giant dinner. That's kind of what it's like. Ultimately, though, I think we know we have the opportunity to really make progress for the American people. We can put a check on the Biden administration because we're going to have the gavels, and we can provide oversight and accountability that we haven't seen in the last 2 years. It's important that we come together so we can get on with the work of the American people.
Is that the goal at this point of the Republicans, as someone who actually is close to Kevin McCarthy, the oversight and accountability, a lot of investigations rather than actually getting legislation done?
Well, I'd like to see us get legislation done, but the low-hanging fruit is to provide accountability for the American people. Think just in the Financial Services Committee on which I sit, which oversees the Security and Exchange Commission, Chairman Gensler has come before the committee 0 times in the last 2 years. That's going to change. We need to provide accountability. We need to provide oversight on behalf of the American people of the entire federal government.
So let's talk about your particular role. Kevin McCarthy, I saw in a tweet, says that you're one of the 4 people leading a transition. And it is basically on dealing with the House of Representatives, protecting the House of Representatives, which we saw attacked on January 6th. What are you looking at as part of that transition?
I think one of the most important things is one of your 5 rights under the First Amendment, that you have the right to petition your government for grievances. On the House side of the Capitol, the House has remained not fully open for over 2 years now. It's time we rip off the Band-Aid off these COVID-era policies and we allow everything to get back so that you can come and visit your member of Congress, share your opinion, come for a tour of the United States Capitol. We're done with the COVID-era policies. People want to see us get back to normal, and that's what I'm working on.
Do we have the security systems and personnel in place to protect people from something like January 6th? None of us want to see that happen again, I dare say.
No, absolutely. We need to make sure that we keep the campus secure and safe. We can do that. I've been told that all of those policies will be in place. We don't need to alter the security situation, but what we do need to do is make the campus open and accessible. I'm confident that we can walk and chew gum at the same time.
Do you need more funding? Do you need more personnel in the Capitol Police? Do you have what you need to keep it safe?
When I'm talking to Capitol Police leadership, I do believe in large part we have the funding that we need. Now we need the leadership to be able to actually secure the campus. But those are questions that are ongoing as situations change here on Capitol Hill. But we do need to make sure we keep the place safe. But we also have to make it open and available to the American public. Again, I'm confident that we can do both.
So looking forward to the next 2 years, however it plays out, what is the main thing you want to get accomplished as a Republican?
Yeah, I think really we got to get our federal spending in place. We continue to watch the Fed come in with a blunt object to try to slow the economy. Why? Because Congress has wildly overspent over the last 2 years. Getting our spending on a sustainable path so we can actually get ourselves back to normal, I think, is job number one. And if we do that correctly, we'll be successful in bringing inflation down.
As you know, Congressman, so well, in managing any kind of budget, whether it's a private budget or public budget, there are 2 factors. One is the expenses. You just talked about the spending. The other is the revenue. What about actually making a balance of the 2? I must say, when I manage budgets in private sector, I would always say it's got to be both. You can't just do one or the other.
Well, that's why pro-growth policies are going to be so absolutely critical. As we look out, we have a whole host of tax cuts that have been put in place that were generating significant economic growth. We need to make sure that those cuts are made permanent to continue the robust growth we saw prior to the pandemic. We need to unleash American energy. We need to right-size our labor policies so that more people come off the sidelines and return back to work. If we're putting forward pro-growth policies, we're going to see revenue increase without having to raise rates.
So, Congressman, finally, this is a very large and complicated economy, a large and complicated budget. Is there nowhere that tax increases might not make sense? I mean, going back to Ronald Reagan, he did have effective tax increases in some of the usage taxes, right?
Well, I think what's key here is that we don't see a net tax increase. There could be some tweaks, some trade-offs in these conversations, but I don't think that this is a period of time where we need to raise taxes on the whole. I think what we need to get on with the work of is putting forward pro-growth policies that actually grow the economy, and in doing that will generate revenue rather than, again, raising taxes.
Congressman, really great to have you with us again. Thank you so much for your time. That's Congressman Brian Stahel, Republican of Wisconsin. Coming up, government spending and borrowing. We're going to go over the lame duck session with Maya McGinnis of Committee for a Responsible Federal Budget. This is Balance of Power on Bloomberg Television and on radio.
Modern life consists in large part of entries in databases. If you have money, what you have is an entry in your bank's database saying how much money is there. If you have a share of stock, what you have is generally an entry on a list kept by the company or by some financial intermediary. You have to trust the keepers of the databases. What if we updated these databases? If we rewrote them from scratch in modern computer languages, using modern software engineering principles, with a goal of making them interact with one another seamlessly? If you did that, it would be almost like having one database, the database of life. You could send money in exchange for a house, or you could send someone's social reputation in exchange for participation in an online class, or whatever. It's all the same computer system. That would be convenient and powerful, but it would also be scary. It would put even more pressure on trust. Whoever runs that one database would, in a sense, run the world. Who could you trust to do that? But what if there was one database and everyone ran it? That's the crypto story.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close.
Welcome to Bloomberg Crypto.
This is Balance of Power on Bloomberg Television and Radio. I'm David West, and we started the program with a discussion with the Republican Congressman from Wisconsin, Brian Stile, about the situation with the U.S. federal budget. Now we bring in somebody who is nonpartisan, who really knows the budget backwards and forwards and some of our problems. She's Maya McGinnis, president of the Committee for a Responsible Federal Budget. Maya, it's great to be with you here in person in Washington. So let me start with something we didn't talk with the Congressman about, and that's the debt ceiling. As I understand it, that's not imminent. It's not tomorrow. It's probably next month, but sometime next year we're going to have a problem. Take us through the debt ceiling, why that's such a big issue.
Right. So the debt ceiling is the limit on how much you can borrow. We obviously have huge amounts of structural borrowing in our economy. And when you reach the debt ceiling, you're not allowed to borrow anymore. That does, if you don't make any changes, lead to default. And that is the worst economic scenario that you can imagine. Self-imposed recession would go global. It would be really terrible in its effects. The issue, however, is how are we going to lift the debt ceiling? Frankly, we should do it immediately. We should do it right away, even before that deadline. But because there's so much political posturing, I think that's going to be difficult. If you look at the history of the debt ceiling, there was a period of about 25 years when we did increase the debt ceiling. We also made changes that would help control our debt, whether it was policy changes or process changes, commissions, all sorts of different things. That was a pretty constructive way to work about it. Now, more recently, four of the past 6 debt ceiling increases, they actually made the debt worse. So we now have this whole bipartisan era of let's lift the debt ceiling, complain about it, maybe threaten default, which is really reckless, and then go ahead and grow the debt even more. So I think the big question is there a way we could go back to the way we used to do it, where we actually use this as a moment and say, we've got some real fiscal challenges in this country. How can we lift the debt ceiling without any drama, but how can we also start to face some of those challenges?
That history just went through has led some experts, some economists say, let's just do away with it. I mean, Jason Furman says it's something like, let's make it $5 quintillion,
right.
Some ridiculous number, so that we don't have to worry about it anymore, because it's not really effectively curtailing borrowing or spending. What do you say to that? Maybe it's time to say it's not doing any good for us, it's just a nuisance.
Yeah, because we've become so polarized and unable to function, there's real risks that go with the debt ceiling, but there's also real risks that go along with the debt. And before we get rid of it, I would think about what you could replace it with that would be more constructive, because the problem is right now, we have no limits on our borrowing. We don't require that we pass budgets. In fact, we haven't passed an actual budget in the past 7 years. We haven't passed one on time in 2 decades. So we don't have any restrictions, even if you do pass a budget, on how much you can borrow. So if we were going to get rid of the debt ceiling, I suppose I would opt for let's reform the debt ceiling and let's do it in a way that actually limits how much we can borrow, but not at the end where it could cause a default, but in the when you're passing the bills that are require borrowing, that's when the lawmakers should be required to actually say, I realize I'm voting to increase the debt and I'm on board with that, or say, we're going to stop and we're going to figure out how to pay for it.
Maya, I wonder if one of the problems with the debt ceiling is a little bit what we had with mutually assured destruction back with the Soviet Union back in the old days of the Cold War. The alternative is so inconceivable that it's not a meaningful threat. And with the debt ceiling, then the notion that the United States government would default on its debt is so inconceivable that it's actually not much of a threat, and so it doesn't scare anybody.
Yeah, it's a great point. We've learned that when you have these kinds of restrictions, they should be things that are not so terrible they'll never happen, because Congress will have to find a way to avoid it. they should be things that would be sensible policies. So instead of a debt ceiling where if you don't lift it, it means you're going to default, what if you were not lifting the debt ceiling, some gradual policy changes went into effect on both the revenue side and spending side that would start to bring down your debt, and you made that automatic? That would be a constructive kind of default. I think we've learned that these, actual create chaos default mechanisms are not the right thing to build into any part of the budget.
Although, didn't we try that with President Obama, where they had some automatic cuts that went into effect, and they thought they would be so draconian that the two parties would have to come together, and in fact, they didn't, and those draconian cuts went into effect, I think.
Well, we had spending caps, that's exactly right, except then Congress every year voted to get rid of those draconian spending cuts, so they never lasted. But I think the lesson from that one is don't have draconian spending cuts, have reasonable spending cuts. Have things that are gradually phased in that are actually tenable, small changes on both the revenue and spending side, not so huge that they're going to force action, because that action actually never comes. We've seen that through experience.
We have a December 16 deadline right now in funding the government. This is not the debt ceiling, but just keeping the government funded. And right now, there's a disagreement, as I understand, between the Democrats and the Republicans about whether we increase discretionary spending as well as defense spending. As a practical matter, is there a way to use that mechanism to have some even modest reforms, such as you're talking about, as opposed to all of the above?
There is a way to do it. The question is whether they will opt to do it. So absolutely, what we should agree is right now we know we have two big problems: inflation and near record levels of debt. Any further borrowing exacerbates both of those, and there's no justification for it. So we should first and foremost agree there will be no new borrowing. There's no reason to borrow more. And so then if you want to have some tax cuts attached, some healthcare measures, some spending increases, you'd need to offset those. And if you want to increase the appropriations levels by higher than is warranted by inflation or anything else, which is what they're talking about, numbers that are even higher than inflation, which will exacerbate inflation, you need to find a way to offset those costs. So I think the first choice is doing the real act of budgeting. If you want to do something, how are you going to pay for it? What I worry is that they're going to say, I'll trade you unpaid for tax cuts and higher defense numbers for unpaid for other tax cuts and spending increases and discretionary spending, and we will see a situation that will make inflation significantly worse.
Maya, to my ear, a lot of this sounds very sensible. I mean, you know much more about it than I do. Very sensible. At the same time, I wonder whether this can be decided as a policy matter in Washington or whether the markets ultimately have to impose discipline. I'm thinking about the bond vigilantes. Are we looking at a time, particularly as we see interest rates go back up, borrowing all that money, that enormous amount of money the U.S. government, was a lot easier when their interest rates were 0.5% or 1% or 2%. When it gets up to 5%, 6%, it's going to be painful.
That's true, and low interest rates, which are kept artificially low in a number of ways, kind of exacerbated our ability to deficit spend. It made it not seem that painful. And as rates are going up and inflation is going up, there is more pressure. But at the same time, I'm concerned about leaving it all to markets, because we've seen markets are very short-term focused, and they can see the short-term benefit of something like a burst, a sugar high, more spending, more tax cuts. They can see the benefit of that, and they don't price in as much the long-term negative effects because they're focused on today. And so I don't think that markets are going to be what discipline us. I think we're going to need political leadership, and that's what I'm worried about, because that's kind of hard to find right now.
That was exactly my last question, political leadership. There was a time, whether you think he was right or wrong, you had a Paul Ryan who really cared about the budget. At one point, as I understand it, he would prefer not to be Speaker of the House because he wanted to run the House Ways and Means Committee. Are there leaders, either Republicans or Democrats, up on Capitol Hill you talk to who really live the budget and the deficit issues?
Well, it's interesting because Paul Ryan was tremendous on entitlement spending, but he also pushed through a tax cut that wasn't paid for. And we have that on both sides, where there are people who are really good on some parts of the issue, but maybe not both sides. You have to look at revenues. You have to look at spending. You can't pretend that there's a free lunch on either side. I will say that what we saw with the Inflation Reduction Act, where Joe Manchin basically took a huge, recklessly irresponsible Build Back Better plan and wrestled it into something that reduced the deficit, not by enough, clearly, but it was a start. I think that what he did there was exactly what we need more politicians to do. And he said, let's look at higher taxes and less spending. And that is more of a balanced approach that I think is what we need.
It's fascinating. It's really always great to talk to you, and particularly here in Washington together. Maya. This is really exciting. Thank you so much to Maya McGinnis. She is president of a committee for a responsible federal budget. Still to come, we're going to take a look at the Georgia Senate runoff election with political contributors Rick Davis and Jeannie Shan Zaino. This is Balance of Power on Bloomberg Television and on radio.
Tomorrow, Bloomberg is live from the Goldman Sachs U.S. Financial Services Conference in New York City, speaking with industry leaders, including an exclusive interview with David Solomon. Bloomberg Television and Radio, your global business authority.
Some years ago, this little town became famous for having 5 centenarians and made it to the cover of National Geographic, having 5 centenarians out of a couple of thousand people.
Eu, 102 anos. Qual é o segredo? Eu não sou. Eu mando sempre sempre.
Fasting is such an interesting part of the longevity conversation. And ask the question of, well, why are these people living so long?
Fasting has been done for thousands of years, of course, but we now had to move away again from these ideas of eating or fasting. They both mean very little. I've seen 110 healthy, but it's not going to be doable for the entire world population. It's going to be doable, I think, for the people that listen and follow all the right moves.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. There's a lot going on these days, and the question is, what is it doing in the markets? For an answer to that, we turn now to Abigail Doolittle. So where are the markets, Abigail?
So we're looking at a down day here for the start of the new week. It's in fact the third down day for the S&P 500. Right now, the index closer to session lows, down 1.3%. You have the Dow down about 1%, the NASDAQ down 1.4%. A little bit more weakness for the banks, down 3.5%, which is interesting only because we do, of course, have yields sharply higher. So this is a good news is bad news day because that ISM services number came out better than expected, above 56, which suggests nice, healthy growth in the services area. But that, of course, David, calls into question whether or not the Fed is successfully cooling the economy. There's a lot of evidence that they are. But here you have the services area, which still seems to be pretty hot. So yields higher, stocks down.
So I must say, when I came into work this morning, I thought oil would be a big story because we had the OPEC Plus meeting on Sunday, and then we had the price caps come into effect. Are energy companies being affected differently from anybody else right now?
Well, it's interesting. Earlier, we had oil higher, up about 2% on that, around $82 per barrel for WTI crude. And you had the energy sector as one of the only sectors higher when the stock market opened. Now we have oil, in fact, down 1.7%, and you have the energy sector down with the rest of the sectors. So it seems that folks are, uncertain in the same way that OPEC Plus is, because of my understanding of that is that they're on pause right now because they don't really know what the direction of oil is with the caps for Russian oil. So I think that they're waiting to see. It seems like investors are too, in terms of the fluctuation, not even fluctuations, bigger moves that we've had for both oil up earlier and now down 2%.
You saw Mike Wilson from Morgan Stanley come out and say, he was bullish on stocks. Maybe they've gone as far as they're going to go. What typically, if there is a typical happens in the month of December, what should we expect for the rest of the month?
So seasonally, December is a really good month, and it's not even the Santa Claus rally, which is at the end of the month into January. But I think that there's a lot of year-end, month-end, toward the end of December that can help out. And especially in a year like this, where you've had stocks down so much, you could see investors try to chase the market up, if you will, any sort of good news. We are, of course, waiting for the FOMC and the CPI. Mike Wilson's talking about resistance of the 200-day moving average. It's refreshing to hear so many people talking about the technicals. Take a look at the Dow, though, David. It's well above its 200-day moving average, and it's above that August high. So let's watch the battle between the Dow and the S&P 500.
Okay, Abigail, thank you so much for that report on the markets. That's Bloomberg's Abigail Doolittle. Coming up, we're going to talk with Brian Corbett of Managed Funds Association. And this is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy in 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like. But the more you could be you, the happier you will be.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto. The people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We want to keep you up to date on news from all around the world. For that, we turn to Lisa Mateo here with the first word.
Thank you, David. Well, in North Carolina, more than 33,000 homes and businesses were still without power today after what was called an intentional attack on 2 electrical substations. Authorities say the substations in Moore County were damaged by gunfire. Federal officials have been growing concerns that the nation's power grid is vulnerable to terrorism. The European Union and the Group of 7 have begun imposing their cap on Russian oil prices at $60 a barrel. The Kremlin is working on a response and says it won't recognize the rules. The French finance minister calls the cap a worthwhile effort.
We will make an assessment of the efficiency of the oil cap at the beginning of 2023, but it's worth trying with the view of reducing the Russian revenue from oil.
There are questions about how effective enforcement of the cap will be. Russian President Vladimir Putin drove a Mercedes over a bridge to occupied Crimea that was seriously damaged in an explosion. Putin inspected repairs to the road and rail portions of the bridge, which was used to supply Russian invasion forces. Russia blamed Ukraine for the attack. Ukraine didn't claim responsibility, but issued a postage stamp marking the event. Hertz will spend $168 million to settle hundreds of false arrest claims. The rental car giant was accused of falsely reporting customers to the police for car theft when a vehicle was not returned on time. Hertz says it's likely to recover what it calls a meaningful portion of the settlement from insurers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg. David.
Thank you so much, Lisa. Well, you really, if you follow Bloomberg at all, know that there's a lot of turmoil going on in the markets, in large part because of the increased interest rates, certainly in the United States, but around the world. At the same time, we have some questions about liquidity in the marketplace when it comes to treasuries. Welcome to somebody who deals with the markets and their functioning every single day. He's Brian Corbett, president of the Managed Funds Association. That represents the alternative asset management industry around the world, not just the United States. So welcome. It's great to have you here.
Thank you, David. Appreciate it.
So give us your sense about how the markets are functioning right now, because there's a lot of concern about that. It was exacerbated by what happened in the UK, actually, with the gilts. But how are the markets functioning from your point of view right now?
Well, right now, the industry is facing a historical amount of rulemaking from the SEC that's complicating the market situation. So far, Chair Gensler has put out a very aggressive rulemaking agenda of over 18 rules that affect all elements of an asset manager's business. It affects their ability to build their book, how they negotiate with their LPs and investors, and lastly, their day-to-day operations. And when you step back and look at all of this activity, what we're concerned about are how do all of these new rules, over 18 of them to date, more coming, how do they work together? What are the unintended consequences? And as you're raising, what are the concerns that these rules raise in a very volatile market environment?
So let's talk about those rules. First of all, are they actually going to see the light of day? Because the SEC chair has been talking about these rules for a long time. We've had him on, actually, and said, where are they? You predict they're going to be here. They don't seem to be coming down the pike. Are we actually going to see them or some version of them?
I think we will. I think there's a defined process for putting out rules for comment and then soliciting comment and coming out with a final rule. I think Chair Gensler has made it clear that he's going to proceed with his agenda. Even with the change in Congress and the House, I still think he will proceed with his schedule.
Well, I was going to ask exactly that question. With Republicans in the majority, with oversight responsibility up on Capitol Hill, you've spent time up there. You know the way it works. Is that going to at least slow him down, if not stop him, on at least some of these regulations?
So to date, we have seen a bipartisan effort by Republicans and Democrats from House and Senate to encourage him to slow down, think about the unintended consequences, really understand the rules, how they work together, and what they mean for markets. And I would expect with the new House majority being Republican that those oversight actions will continue, if not accelerate. While Congress has tools that could slow him down, I do think ultimately he will move forward with the final version of many of these rules.
So, Brian, you said that these proposed rules are exacerbating the situation in the marketplace. To some extent, people think that they're being proposed to address some of the problems with the marketplace. And let's talk specifically about transparency. As I understand it, going back to 1933, 1934, the theory about securities regulation is transparency, so the investor knows what they have. Transparency, particularly, let's talk about the Treasury market right now, where there's a lot of concern about liquidity, and a lot of movement has gone over to the hedge funds and things that are not publicly available because of some regulation that came out in 2008. Is there a legitimate point there that we need more transparency, particularly on leverage in the Treasury market?
So first off, a lot of information about hedge funds and other market participants is widely available, and it is collected by the regulators. So that information is out there. What Chair Gensler is proposing to date with respect to the Treasury market is, one, how do we clear Treasuries? And I think there are some viable, good proposals for how we move to more of a central clearing operation. But he's also proposed a rule called the dealer rule that we actually think may undermine liquidity in Treasury securities.
Well, how does that work? Because I had heard that the dealer rule would actually facilitate because they know exactly who's holding them, what kind of leverage is against.
So today, investment managers are in the market. They're executing their strategies. What the SEC is proposing that if a manager trades over a certain level of Treasury securities, they have to be registered as a broker-dealer. So if you're an investment advisor, you have one set of regulations, you're already registered with the SEC. Chair Gensler is proposing to change that and add a whole host of new costs and burdens on investment managers and become a broker-dealer. What that's going to do is drive many funds out of the market. At the exact time when Treasury Department is trying to bring more buyers and sellers in, the SEC is proposing a rule that will increase concentration as funds pull back because they don't want to be broker-dealers. It's cost prohibitive. Their agreements with their investors don't allow it. And you're going to see potentially less liquidity and more volatility volatility at a time when we're all concerned about treasury markets.
Tell us about derivatives, something a lot of us got acquainted with about 2008 or so.
Yes.
There were all of that going on. And it turns out there was a lot of opacity. We didn't know exactly what was going on. You didn't know about counterparties and things. There's a report actually on the Bloomberg today that the BIS, Bank for International Settlements, is talking about a $65 trillion wall of opaque derivatives globally now we're talking about. We're not talking about the United States. Tell us about that. Is that a real problem? Because it sounds like it might be.
So certainly derivatives is something that we've spent a lot of time working with both the CFTC and SEC on. The Chair Gensler has proposed a new rule looking at security-based swaps. It's a little bit different than the dollar derivative contracts that you're referring to that have been in the press today. I think it's incumbent on all financial regulators to make sure they're communicating and make sure they're talking to market participants to understand different volumes and contracts. And I think we have a regulatory regime in place, certainly in the U.S., that provides that type of transparency, certainly to the CFTC and increasingly to the SEC as they look to expand into security-based swaps.
So, Brian, I have the impression you're not a big fan of a lot of the regulations being proposed to the SEC. Are there any that you think, at least in a proper form, would be constructive? Is there work to be done that would be constructive?
Well, I think the industry supports disclosure, and we have long supported disclosure-based regimes. Where we think the SEC is crossing the line, and frankly, they don't have statutory authority to do many things, is to ban certain practices. And the way that sophisticated funds negotiate with their investors to secure their investment in a fund. You've long had contracting parties, very sophisticated pension funds and hedge funds on the other side negotiating. The SEC for the first time is looking to ban practices. And we think that is an overstep of their authority, which is as a disclosure regime.
So I can just sense people in the audience right now watching this saying, wait a second, how can you have an alternative asset manager and not talking about crypto? So is that within your bailiwick? Is that alternative assets? And what about regulation in that sphere? Because goodness knows there seems to be a growing clamor for some regulation.
There is. And certainly this is an asset class that we've all been watching over the last couple of years as the market grows and some institutional capacity comes into the crypto markets. What's happened in the last few months I think has caused all of us to sort of pause and reflect. Certainly Congress is going to spend a lot of time looking at this. One of our concerns is that crypto regulation is going to really suck the oxygen out of the room in Washington as the new members in Congress look to legislate, and Chair Gensler is going to continue to pursue a fairly aggressive enforcement agenda with respect to the asset class. So it will be a busy time, but there are a lot of other issues that he's raising that we think policymakers need to stay focused on.
It's really helpful to have you in to take us through those, Brian. Thank you so much for that. That's Brian Corbett. He's president of the Managed Funds Association. Coming up, we're going to take an early look at the Senate runoff contest in Georgia. That's coming up tomorrow with our political contributors Rick Davis and Jeannie Shanzano. This is Balance of Power on Bloomberg Television and on radio.
When the price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between two of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the two account for about a quarter of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Inflation hasn't been this high in the UK since 1981.
Then surveillance for in-depth analysis.
Jonathan Farrell, Lisa Bramwitz, and Tom Keene, thrilled you're with us.
Inflation in the United Kingdom, brutal.
Underlying food inflation doesn't appear to be that bad.
It ties back to the tenuous situation of what we're looking at with respect to energy.
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Tomorrow is again election day. We thought we were done with the midterms. Well, we weren't. We got one left to go. It's tomorrow down in Georgia for the Senate. And here to take us through that runoff election, we welcome Bloomberg political contributor Jeannie Shanzano of Iona University and Rick Davis of Stone Court Capital. So I'll start with you, Rick, actually. Why is Herschel Walker even in this race?
Well, because he's the Republican nominee, and that's what Donald Trump wanted, and so he got what he wanted. And so now everybody who is a Republican in Georgia are kind of stuck having to vote for a guy who they just want to vote for a Republican, and he just happens to be the nominee. So there are a lot of people who are swallowing big pills to vote for him. And as you mentioned earlier, Jeff Kemp, the governor, has an ad out where he actually says, he didn't even mention Herschel Walker's name. He just says, vote for the Republican. And that's what is happening in Georgia today, is that people who will cast a ballot for Herschel Walker are doing it because they want a Republican, and that's it.
So Jeannie, I'm going to ask you the same question. Why, in fact, is this even a race at this point? For given the reasons, some of the reasons that Rick laid out, we've heard a lot about. Herschel Walker should be a very wounded candidate, it seems like, and yet the reports are it may be close.
Yeah, it's because Georgia is a swing state, and to Rick's point, you've got Republicans who are going to hold their nose and vote for Herschel Walker because he is the Republican, and that's why we've seen Raphael Warnock and the surrogates try to make this less a referendum on the Biden administration and Warnock as Democrat in a democratically controlled Senate, and more as a choice between a flawed candidate and a flawed personality in Herschel Walker and Raphael Warnock, this incumbent senator. And of course, you know, my big question as we come into this last day of campaigning here is, where has Herschel Walker been over the weekend? He was largely absent from the campaign trail. We talked last week, he was largely absent over Thanksgiving. He's not talking to the press too much. And on the other hand, you have Raphael Warnock out there stumping, working hard to turn out voters. The betting markets have Warnock ahead by about 89%. So if you believe those, Warnock's going to keep this seat. But if you look at the polls, it's awfully tight, to your point, and that's what's got Democrats a bit nervous as we go into tomorrow.
Rick, why does it make a difference? 50-50 we've learned the Democrats can control, or maybe I should ask it a different way. Who is Joe Manchin rooting for?
Well, and you've just answered your own question, because Joe Manchin is the reason you need that extra vote, because he held up a lot of legislation that could have been done with 51 votes because he was the swing vote. And Democrats need a caucus that they can at least lose one and still get things done. So even reconciliation and topics like that only happen if they are comfortable with the knowledge that they've got that extra vote.
Rick, there's another election coming up in short order, and that is for Speaker of the House. That Kevin McCarthy has made no secret of the fact he'd like that. It was thought, I guess, that he was a good shot, but now he's got some challengers. What are his odds?
Well, I think his odds are still really good that he's going to get elected because he did one of the things that was most important, and that is he got Stephen Scalise to really agree not to campaign against him. If there was a legitimate option to him, that would be a real contest. But out of the 5 people who are now withholding their vote, he only needs 1. He'll get it. The other 4 will register their protest. He'll win by 218, but not by more.
Okay, so Jeannie, my question to you is, let's assume he gets it. Kevin McCarthy is the Speaker of the House. How long will he be Speaker of the House? I ran into somebody last night who claims to know about these things. They think we may have 2 or 3 speakers in the next Congress.
You know, I would not be surprised. It is very hard to imagine how he runs this caucus. I mean, we are assuming, and I agree, he probably becomes Speaker, but his difficulty has been the people who oppose him being Speaker really aren't asking for that much in return. They just don't want him to be Speaker. And even if he's able to pull over 1 to Rick's point and he becomes Speaker, that's not going to change in the next 2 years. So I think it is likely we could see at least 1 additional Speaker in the next 2 years, if not 2. And it is just a stunning reality of how difficult it is going to be for anyone, forget about Kevin McCarthy himself, to run this caucus with these more extreme people on the right side of the caucus and the very narrow election victory they had. If Kevin McCarthy got the 60 he expected, he'd be in a much better position. But it's this tight margin that has him going into this thing, if he is elected Speaker, in this wounded position.
Rick, you know that Republican caucus up on Capitol Hill better than most, better than Jeannie, better than me. If you were advising Kevin McCarthy right now, and if he gets to be Speaker, what would you tell him to do? What's the most important thing he can do?
You know, I think to create a generation of leaders at the committee level that, you know, will be future speakers, future committee chairs. You know, he's got an opportunity to set the agenda for the party in the House of Representatives. And that may be the only thing he absolutely controls. And so I think his ability to get a team that's trained, it's been a long time since we had a Republican majority in the House. And so a lot of really good people have left because they haven't been able to become committee chairs or caucus chairs. And I think the leadership is going to be the #1 thing he could get done.
So, Jeannie, let me ask you the same question on the Democrat side. We know who's going to be the leader for the Democrats. It's Hakeem Jeffries. We talked about it last week. It's historic. First black congressman to serve in a leadership role like that. And there's been a really smooth transition, I'd say. I was at the Kennedy Center event last night, the honors, and Nancy Pelosi was there with her husband, and they got a prolonged standing ovation from the crowd. It was great to see him back out. What does Hakeem Jeffries need to do?
Hakeem Jeffries, it is a historic pick, and it was more of a coronation than a fight for him to become the majority leader. What he's going to have to do, he's going to have to try to keep the caucus together, and he's going to have to try to oppose as much as possible changes that the Republicans want to put into place, which dismantle some of Biden's legacy. And so, you know, he's going to have a little bit of a challenge on the progressive side. He has famously a pretty tough relationship with people like Alexandria Ocasio-Cortez. Even though he's a member of that caucus is going to be big. It's going to be about 106 in the new Congress. So we're going to have to see if he's able to keep them together and focus on challenging and opposing what Republicans want to do, because they're going to be focusing a lot of their attention not on passing bills in the interest of the American public, but on investigating Joe Biden, Hunter Biden, and the Biden administration, and people like the Department of Homeland Security Secretary. And so they're going to want to oppose as much as possible any of those positions that Republicans take.
I'm so happy to say that Rick Davis and Jeannie Shanzane will be staying with us as we're going to turn to, believe it or not, 2024. And is it going to start in Iowa again for the Democrats? Maybe not. This is Balance of Power on Bloomberg Television and on radio.
It has been incredibly difficult for all types of companies to find employees lately. Many people with disabilities who aren't working could be working if only given a job.
About 20% of people with disabilities are employed.
Right now, we're in an environment where there is a war on talent out in the marketplace. Every employer out there is struggling to find people to come into their shops and to find good, hard-working, dedicated employees. We have found through this program and other ones like it that we have within the organization that these individuals are looking for meaningful employment.
People with disabilities want to be able to live, work, and recreate in the community the same as everybody else.
Many of us identify ourselves right away by our job title. That's an important part of our image of ourselves. So that's true for all of us, whether or not you have a disability.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become chief future officers. The cruise industry shut down during COVID. Now, CFO Naftali Holtz has Royal Caribbean full speed ahead.
Our goal is to get back to the balance sheet we had. This business is very resilient.
Watch Chief Future Officer, Wednesday on Bloomberg.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, we've got some developments now with respect to 2024 as we hear that President Biden has suggested that perhaps we should not start the democratic process with those caucuses out in Iowa, and they're going to be deciding exactly what they do next. To take us through it all, we welcome now our political contributors, Jeannie Shanzano and Rick Davis. So, Jeannie, let me start with you. Who gets to decide? Does President Biden get to decide this?
Well, it's going to be the Democratic National Committee. We already saw one vote in favor of his proposal. Some people are calling it the Biden Protection Act. Other people are calling it Biden's revenge on Iowa and New Hampshire for not, supporting him, not just in 2020, but Iowa over the years. He really has very fond feelings for South Carolina, and that's where he'd like to push this thing. So that would be, if he has his way and the DNC supports it, that would be the first in the nation. And of course, I was wondering, David, if you had a part of this vote, because we see Michigan moving up, your home state as well, would be, fourth or fifth in line if this plan goes through. And of course, the reason that Biden is pushing for this, as he wrote in his letter to the DNC, is because he wants to diversify the primary goers, the voters at the beginning of the stage who are from the Black and brown community. He wants to diversify geographically. He wants to diversify in terms of the more rural and ideological aspects of the party, and they haven't found their way into Iowa and New Hampshire, which have been the first in the nation for, since the 1970s. So this is what they're pushing for. We're going to have to see if it happens. It's still got quite a ways to go before we know for certain what the calendar looks like.
So, Jeannie, I'd be less than honest if I didn't say that my heart warmed just a little bit to see my home state of Michigan mentioned there, whatever it means for the nomination program. But, Rick, I'm really curious from your point of view, because you've run these political campaigns, you've run presidential campaigns. If the only goal, and I'm not saying it is, if the only goal was to get the best candidate, what's the right answer?
Well, first of all, if anybody thinks it's a fair trade to have to deal with the Upper Peninsula of Michigan as a trade from being in Iowa in the winter, it's not a fair trade. Look, I think in this case, it actually causes a lot of controversy within the Democratic Party because they actually have to, they make the rules, they impose them on the states. And if anybody's sitting around thinking, gee, if Biden doesn't run, maybe I will, this really changes the nature of the election. And you have to rethink all the things that you thought. I'm a retail politician. I liked Iowa and New Hampshire. What am I going to do now? I've got to go to South Carolina. I don't have relationships in South Carolina like I do in Iowa. What if you'd won Iowa and now you want to realize, all the advantages I had, whether you're Buttigieg or Bernie, who did well in Iowa, now you don't have those advantages anymore. So I think it really throws a monkey wrench into the Democratic caucus.
Jeannie, how much did Iowa do this to themselves? Rick was saying this a little bit earlier. You and I and Rick software out there when they couldn't figure out who won the caucuses for a good long time. They remember they had that new system they put together, very proud of it. It just all broke down. How much of that is part of the problem?
I think it's a big part of the problem. You know, both Iowa and New Hampshire are going to fight back on this. We've already heard this. New Hampshire may be on more solid ground because that was quite a disaster for the 2020 Iowa caucus. I think it was about 24 days before they counted the votes. But, you know, they do both have state laws which says they will be first in the nation. So this puts the DNC in a position where it's going to have to decide, does it strip these states of their delegates? And they may decide to do that. But I do think it's an important conversation to be had because since the 1970s, this has been the calendar.
Either that or we could just start it tomorrow. Might as well just get going. Thank you so much to Bloomberg political contributors Jeannie Shanzano of Iona University and Rick Davis of Stone Court Capital. Check out the Balance of Power newsletter on the terminal online. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we'll talk to Mary Loveloo of Peterson Institute, and this is Bloomberg.
Modern life consists in large part of entries in databases. If you have money, what you have is an entry in your bank's database saying how much money is there. If you have a share of stock, what you have is generally an entry on a list kept by the company or by some financial intermediary. You have to trust the keepers of the databases. What if we updated these databases? If we rewrote them from scratch in modern computer languages, using modern software engineering principles, with a goal of making them interact with one another seamlessly? If you did that, it would be almost like having one database, the database of life. You could send money in exchange for a house, or you could send someone's social reputation in exchange for participation in an online class, or whatever. It's all the same computer system. That would be convenient and powerful, but it would also be scary. It would put even more pressure on trust. Whoever runs that one database would, in a sense, run the world. Who could you trust to do that? But what if there was one database and everyone ran it? That's the crypto story.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome to Bloomberg ETF IQ. I'm Katie Greifeld.
And I'm Matt Miller. We are at session lows.
I know.
Right now, equity sell-off that probably should have happened on Friday.
Delayed reaction, but we got there.
A little bit of a delayed reaction in this imperfect market. Let's get to the biggest stories in the more than $9 trillion global ETF industry right now. Bloomberg Intelligence is out with its 2023 outlook. We'll discuss the year ahead as Vanguard helps to drive $500 billion of new cash into the sector.
Meanwhile, China has been making slow but visible progress in loosening its COVID restrictions, sparking a comeback in some some ETFs, Matt.
And after the weekend, sometimes it's tough to get through a Monday. So we're going to take a look at an ETF that focuses on coffee prices.
And Matt, as always, before we get there, Eric Balchunas from Bloomberg Intelligence with us now to walk us through the flows. Eric, what do you got?
Thank you, Katie, Matt. And look, the party's kind of dwindling down. You know, you talk session lows, but for the past week, really, the S&P's had a lot of down days and it's showing up in the flows. For 6 weeks, we had a real sort of bullish energy in the flows. Look at the top now, Treasuries. You hate to see it. Right here, and Treasuries number 3. Little IVV, it's okay, right? It's not all bad. Aggregate bond ETF, you know, just nothing in here that really tells me investors are excited or bullish, and the overall flows at -6 isn't good. Speaking of that, let's look at the outflows, and this is where it gets pretty bad. You can clearly see all the money that came into SPY and the Qs over those 6 weeks, good chunk of it's left. They clearly did not like what they have seen from Powell or China, and they're just taking money off the table. And VTV, value, that's a lot of money out of the value fund. That's interesting. Value had a nice run. We'll see if more people leave that value trade. Now, Matt brought up Vanguard. I want to look at the league table. It's nice to look at the sort of horse race within ETFs. Each year, it's December. At the top, again, is Vanguard. This will be the 3rd straight year that they took in more money than BlackRock. BlackRock dominated for like 5 years before that. But really, the top 5, these companies right here, they'll call them the big 5, they're all punching within their weight. So no real shakeup here. That said, DFA and JP Morgan, I think, are rising stars. I think, took in more than I would have predicted. So is ProShares. The leverage ETFs did really good this year. But look at all the companies that have taken in money. I think that's compelling and part of the real story because the markets have been so bad. So to take in cash this year, I think, is just a bonus, and many ETF issuers have. So Matt, Katie, even though the money goes here or there, these issuers have products for whatever you're thinking. So they're glad it's just coming in.
Well, it's funny that Eric mentions that Vanguard has been at the top of the pack for 3 straight years because I've been covering ETFs for 3 years, and for 3 years, I've written that year-end story. Let's talk about it now with Todd Rosenbluth. He is head of research at Verify. It's an ETF data provider and research consultant. So Todd, again, 3 years running, it's been Vanguard. Am I ever going to write a different year-end story?
Well, I think Vanguard and BlackRock and State Street are going to be the 3 dominant players for a foreseeable period of time. They offer broad market asset allocation products that are appealing to advisors. They also have some of the trading-oriented products, but it's been exciting to see some of the other firms enter and have success. JP Morgan with JEPI, JEPI, has been a success story this year. WisdomTree has a floating rate ETF, USFR, that's doing very well in gathering assets. Pacer with the COWS ETF, really strong products. I think you've written about that one also this year. There's a lot of great success stories in the ETF marketplace.
Well, and this whole year has been an incredible success story for ETFs, even as it's been a horror story for IPOs and M&A. Why are ETFs so strong as the market's so uncertain, and do you expect that to continue into 2023?
So short answer, yes. We expect perhaps we're going to see $1 trillion of net inflows in 2023. We're having an impressive year, the second best year ever for the ETF marketplace in terms of flows, despite the fact that we've got a down market for equities and fixed income. Advisors have gotten more comfortable using ETFs. They're gravitating towards these products from a tax loss harvesting perspective for the diversification benefits. We at Verify constantly are talking to advisors, and we're hearing them increasingly looking towards the ETF structure relative to mutual funds, relative towards the single stock vehicle. So ETFs are the place to be. This is certainly an ETF show to benefit from that.
Yeah, I want to look at the new launches, right? I think we have a chart of the new launches. There's been 400 ETFs launched this year. Of all the stats they've put out this year, this is probably the most impressive. Typically, if the markets are bad, no one wants to launch a new product because you start off on a bad foot. The track record doesn't look that good. It's amazing how many people still came to market with products. I want to get your take on that, and just maybe if you could forward spin where you think launches will be next year and what kind of stuff we can look for.
Well, we've had a couple of trends that have happened in the ETF marketplace this year. We've had single stock ETFs and single bond ETFs for the more targeted investor that wants the benefits of trading and that also wants the benefits of the ETF structure. We've seen actively managed ETFs punching above their weight, firms entering the new marketplace, either that entered last year and are expanding their products like Harbor, like Neuberger Berman, or firms like Capital Group that's come to marketplace, gathered over $5 billion in just 10 months of net inflows. I think impressing some of the people people within the industry that were a little bit more skeptical.
Yeah, I mean, okay, look, we have a bet on this. Will Capital Group ETFs get to 7 trillion or 7 billion by February? You're looking good on that. But let me just follow up with this. I feel like Capital Group, they're selling active that's going after the core. And we just looked at Vanguard. How is a company like Capital Group or Fidelity going to bring this sort of close to the benchmark active and push out Vanguard? Isn't that a tough sell?
It is a challenge, but they've got, of course, the history to be able to refer to. You know, Capital Group has broad distribution. Other asset managers, they're taking their traditional mutual fund distribution efforts, moving that into the ETF space. Some are going to have success. Some are going to face challenges in educating the advisors that there's the benefit of using ETFs. But Capital Group, $5 billion. I want to exceed myself on that bet we have. $5 billion is just a success story. But we've seen other firms have success. I think active ETFs are 3 times their overall market share this year in terms of what we're seeing versus the overall asset base. So strong year for active ETFs.
And maybe that's a product of this bear market that we've been existing in. But I actually want to go back to that launches versus closures chart, because I find it really striking that, to Matt's point, it's been a terrible year for IPOs. You've seen just all of these launches. You haven't seen that paired with a bunch of ETF closures, even though a lot of these new funds aren't doing too hot. They haven't really been performing well. They haven't been gathering assets for the most parts. At what point does that white line turn into a yellow line?
So I think we're going to see more closures take place a year forward. So some of the products that have come to market in the last couple of years that are more growth-oriented, blockchain-related products, more thematic products that haven't gained traction are going to close. We're going to see closures happen. We're not seeing it in all the markets, though. So we've seen broad ETFs continue to hold assets. You know, Eric and I have another bet that's out there. I guess this is his show and your show. I'll be able to do it. Well, for lunch, for what it's worth. So it's not as if
it's a steak lunch, though. It's a costly lunch.
But we haven't seen ESG. So ESG has been an area that the asset management industry has continued to hold on to and embrace. They love it. They believe in it. They think
investors don't love it.
Well, investors are holding on to some of their products. So ESGD, which is I think one of the top 3 ETFs. This is an iShares developed market ESG ETF that has seen inflows this year. So there are products that are gathering assets. It's not the same.
Wait, you think that ESG is going to make it, but blockchain is going to fail?
Yes, I do, because the narrow, more targeted growth areas that you're trying to have fun with some of your money and it's not working out, you're going to rotate to something else. But if you believe in ESG from a beliefs standpoint,
you're trying to do good with your money.
You are. Then you're willing to, actually those products are holding their own and holding up relatively well in the broader market compared to IVV and SPY and VOO. So I think ESG products are going to survive for longer than people expect.
All right. Great to get your take. Really appreciate you coming in. Todd Rosenbluth there, head of research at Vetify, talking to us about the industry and giving us his forecast for 2023. Coming up, forget buying the dip. Some ETF investors are now selling the rip in 2 of the biggest equity funds. We'll discuss Eric and Katie's favorite phrase next. This is ETF IQ on Bloomberg.
Some years ago, this little town became famous for having 5 centenarians and made it to the cover of National Geographic, having 5 centenarians out of a couple of thousand people.
Io 102 anni. Qual è il segreto? Non lo so. Io mangio sempre semplice.
Fasting is such an interesting part of the longevity conversation. And ask the question of, well, why are these people living so long?
Fasting has been done for thousands of years, of course, but we now had to move away again from these ideas of eating or fasting, and they both mean very little. I've seen 110 healthy, but it's not going to be doable for the entire world population. It's going to be doable, I think, for the people that listen and follow all the right moves.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. Time now for the ETF brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we begin with Chinese tech stocks, specifically internet stocks, rather. You're looking at KWeb here, and as you can see, since about mid-October, it's seen a big bounce. We're talking about 60% there. But what's interesting about this chart is that enthusiasm in the price action has not been met with too much in the way of inflows so far. You did see one big one last week, but under $200 million. So we'll continue to keep an eye on this situation. But let's talk about a chart that I really can't get enough of. This is LQD versus the S&P 500. And what's interesting to me is that if you look at the 21-day correlation between these two measures, it's at almost a record high. Only one other time has it been this high. So stocks and bonds doing pretty much the same thing. But let's stick on stocks, because I want to talk about some big outflows that we've seen from two of the biggest equity ETFs out there. You're looking at the Qs and you're looking at SPY. When you combine their weekly fund flows, over $12 billion left these funds last week, Matt. And that's interesting because it's been a pretty good run for stocks broadly.
Yeah, that's the most since, what, the very beginning of the pandemic?
Seems bad.
That's the most since lockdown started. Little did investors know they should have been buying the heck out of the Qs at that point.
Unbelievable.
Or maybe they did right after that. In any case, let's get more about this with Bloomberg's Vildana Heinrich joining us from the link. Vildana, thanks very much. What do you make of this huge amount of outflows? Is it just all about the Fed like everything else is these days?
Well, I like the way that Katie put it, which is that seems bad, right? So if we are looking at those outflows, they are huge. For QQQ, it's more than $4 billion in the last week. For SPY, it's more than $8 billion for the last week. And then at the same time, if we're thinking about what's happening in the stock market and what's happening with the macroeconomic environment, actually we have stocks holding up fairly well. So the S&P 500 is up some 7% over the last month. Obviously, we've had a lot of good news on the inflation front, and we have investors largely expecting that the Fed will be much less hawkish in terms of its interest rate increases over the next couple of months. So we'll still be seeing interest rate hikes, but they'll just hopefully be less aggressive in terms of the 75 basis point hikes that we've been seeing the last 3 meetings. The thinking is we'll get 50 basis points at the December meeting, and yet we're seeing these huge outflows out of QQQ, out of SPY, out of others, out of other equity ETFs, including VTV. Also saw huge outflows. And when I'm talking to people, I actually spoke with Todd Rosenbluth for this story.
I know him.
And what he said is that basically people are just taking advantage of the huge surge that we've seen in the stock market, and they're taking some profits.
Well, the equity outflows on their own are interesting enough, but it's notable that it's not just stocks here, Vildana. I believe you're seeing this in credit funds as well.
We are seeing this in credit funds as well, and actually it was you who had a really great story, actually a number of really great stories on this topic, where we're seeing large outflows out of fixed income ETFs as well. So in the last week ending in November, so ending November 30th, we saw something like a 96% drop in terms of inflows that had been going towards fixed income ETFs. Some government bond funds were still seeing inflows, but the corporate side was just LQD was seeing $3 billion of outflows during that week. So, and same picture as with the stock market, where we're seeing investors taking advantage of something that had been going well earlier, where we had the 10-year above 4% just 2 months ago. Now it's hovering around 3.6%, and so they're taking profits and potentially maybe just waiting for a better opportunity to get in down the line.
Bloomberg's Vildana Heinrich, it's awesome to see you. Thank you so much for joining us. Still ahead, we're going to drill down into direct indexing with Jamie Catherwood of O'Shaughnessy Asset Management. That's next. This is ETF IQ on Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like. But the more you could be you, the happier you will be.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg ETF IQ. I'm Matt Miller, along with Katie Greifeld.
Eric Balchunas from Bloomberg Intelligence is back with us now for today's drill down, where we focus on one ETF. But Eric, you're breaking the rules today.
I am. I'm going out of the box, Katie. So today we're going to talk about not an ETF, but a custom indexing platform, otherwise known as direct indexing. This is a new kind of vehicle, you know, ETFs, mutual funds, direct indexing, and it's growing. And the concept is take the S&P 500 holdings right here, right? Say you work at Microsoft and you have way too much Microsoft exposure. You want to kill that. There really is no SPY X Microsoft ETF, right? So what this allows you to do is like a separate account where you can sort of customize your index exposure and largely stay close to the index but make small tweaks. Maybe you just don't want Tesla in there, yada, yada. You can see the idea here. Let's look at a sample portfolio of Canvas. So you can see it's a general portfolio like you'd normally see, but inside people are making little tweaks here, again, just to perfectly fine-tune their fit. There's also tax loss harvesting benefits by owning all of the stocks yourself. This is something institutions have been doing for ages, but it's gotten cheaper and this is becoming democratized for retail. Let's look at the difference between ETFs and direct indexing. This is pretty blunt, but clearly with direct indexing, you track an index, but with customization. Tracking error. You're going to vary. A lot of this, you know, the criticism of direct indexing is active, right? You're going to make bets, then you might not outperform or you might. ETFs are going to track that index. They're also tend to be cheaper. 10 basis points or lower can get you your whole core. The direct indexing is more like 30 basis points, and it largely serves equities. ETFs cover everything. So Katie, Matt, interesting new vehicle, not an ETF, but definitely does ETF-like things.
Eric, thank you. Joining us now to talk about direct indexing is Jamie Catherwood. He is Client Portfolio Specialist at O'Shaughnessy Asset Management, which has about $6.9 billion in assets under management. Jamie, it's great to see you on set with us. And I get it. You get your own custom index, but who is this for? Who wants this?
So right now we're going to advisors. So we're partnering with advisor firms, and for them it's kind of a tool that they use just like any other kind of model creation and tracking tool. And so using Canvas, they can, from with one SMA account, build their portfolio, blend active, passive, domestic, international, et cetera, and then set the model. But then what's brilliant about Canvas, our custom indexing platform, is that each account can be tweaked and customized at scale, because for us, Canvas is just essentially turning externally the tools that we've used to manage our SMA strategies for 12 years. And so we have that technology all on the back end, and it allows advisors to customize at scale because they can do some clicks with a button and implement ESG, take away certain stocks, et cetera. And for us, it's just programmatically managed on the back end.
I wonder, you know, I'm in the middle of doing my compliance for this year. I'm a little bit later than everybody else is, but a lot of people can't invest in single stocks. They can't invest in mutual funds, index trackers, and ETFs. Are they going to be able to get into this?
That would be a question for our compliance officer, but that's yeah, I'm not sure about that one. But I think, again, with custom indexing, like anything, just like ETFs and mutual funds.
But do you aim this at all at retail, or is it really for advisors?
It's for advisors, for them to use with their end clients. We are not offering it to retail right now.
Got it. So my take on direct indexing, our view generally is it's going to have a home. I think it will be niche, though, and the reason why I'll get your response to this is, you know, there's been this three big trends towards cheap, passive, and simple. This kind of tries to reverse all three at once, and that's a tall order. So beyond ultra high net worth individuals, could this really spread beyond that?
I think definitely so. Obviously, I feel that way because I'm with OSAM, but also I think that we're not really trying to reverse those three trends. Like any technology, over time, technology lowers costs and passes along those cost savings to the end consumer, in this case, the end investor. And so over time, I think we'll continue to see prices and fees fall. But also, when you're comparing, you know, like a 3 basis point ETF versus a custom index, I think that's not necessarily an apples to apples comparison, because advisors, again, that's who our customer is, are using a blend of active and passive ETFs, mutual funds that have higher fees than 3 basis points. And that's also not accounting for the tax savings that you get with a custom index and all the tax loss harvesting, which our research shows can add 50 to 100 basis points annually. And so when you factor all that in, the cost is pretty similar, if not cheaper. And then in terms of passive, we're just giving the toolkit to the advisor. We're not saying you have to load up on active.
Right.
So I think 51% of all the assets on Canvas are passive. And so we're not trying to reverse any trend because we're not even trying.
Jamie, we're coming up against a break, but I do want to hear from you. We've been hearing for years, it feels like, that direct indexing is going to be the next big thing. But when truly is it going to reach its ceiling or its potential?
I mean, forecasting is a fool's errand, but I think that it's growing. I mean, just from our own experience with Canvas, we launched at the end of 2019 and have crossed $3.5 billion in assets on the platform and 2,000 accounts. And so just from our experience, it's growing very rapidly, and I think it'll only continue to grow as technology and software evolves and price points become lower and fees fall.
Jamie Catherwood, O'Shaughnessy Asset Management. Thank you so much. This was great. Thank you for stopping by on set, too. Before we go, here's a special look at another ETF. This one is focused on the coffee industry. Rather than wake up and smell the coffee, investors can wake up and get exposure to coffee prices through the iPath Series B Bloomberg Coffee Sub-Index Total Return ETN. It's a long name with a short ticker, JO or Joe. The note tracks an index that serves a cup of single coffee futures at a time, purchased 2 or 3 months out and then held until the month of maturity. After a surge in prices during the pandemic, coffee futures are grinding lower in 2022, but still remain elevated. The price for futures for Arabica coffee, that's the variety favored by Starbucks, have dripped lower by about 30% since the start of the year, taking Joe's returns downward. Coffee futures have jumped of late, though, amid lower supply estimates from top producer Brazil, which produces 1 out of every 3 coffee bags in the world. Coffee is adding to the global inflation picture, with prices jumping in grocery stores and at coffee shops like Starbucks, which recently raised its prices. Joe has some $50 million in assets and costs 45 basis points. It gets a red light in the Bloomberg Intelligence traffic light system with 6 warnings for credit risk and the potential for futures rolls cost.
All right, so a special look at coffee there. I don't drink coffee.
Really?
Really? Yeah, no.
You just got that
It's
natural...
like cheap speed. I feel like
That's why
I've
I
done
like
something
it.
illegal when
How
I
do you
drink
wake
too
up?
much coffee. I just do a little calisthenics and maybe some tea. I don't know.
Okay, some deep
I don't know.
breathing.
You guys are both coffee?
Well, tea's got
Yeah.
caffeine. Yeah, I love coffee, but I don't drink it after 3. That's my rule.
Interesting.
Yeah.
Yeah, I have
Keeps
a
me up.
Diet Coke at about 2:30 every day, and that's what keeps me going.
I also like Advil cold and sinus.
Yeah.
It works really well to just
Does-
get you going. You
Does
know?
that wake you up?
Yeah. These markets need a little bit of a wake-up call, right? I mean, we're down, I think, as a result of what we saw on Friday and with the ISM number today. It doesn't look good, but we had a great November and October.
We
So,
did. We did. And that's the thing. I mean, now we're coming up against year end, a lot of profit taking going
Listen,
on. There's
rips are
nothing
going to be
happening.
sold.
Rips are
Rips
going
are going to be sold in 2022.
And
That's
it's
the
all
big theme,
about-
right? It was your idea, right?
Exactly.
Yeah,
It
your
was my
phrasing.
idea.
Dips could get bought. Dips could still get bought at this point.
I would wait maybe until January until you board the ship again if we continue this rhyme structure.
That does it for Bloomberg ETF IQ. For today, I'm Matt Miller with Katie Greifeld and Eric Balchunas. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund is typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
Top end venture is sort of 3x net of fees. You ideally you're hoping for more than that. You're hoping for 5x or more. You're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Welcome now our BNN and Bloomberg audience. Here with the First Word News, I'm John Hyland. Temperatures are expected to plummet to below freezing from Britain to the Nordics this week, boosting energy demand and testing the region's ability to withstand a cold winter. A chilly Arctic maritime air mass is likely to drive temperatures to as low as negative 10 degrees Celsius by the end of the week in the UK, potentially with some snow and wintry showers in the south. The Met Office reported that on Monday. It also issued a yellow weather warning for snow on Wednesday in northern Scotland, with some roads and railways likely to be affected. In South Africa, lawyers for President Cyril Ramaphosa are preparing a court challenge against an advisory panel report that said there may be grounds for his impeachment. At issue is the way Ramaphosa handled the theft of at least $580,000 at his farm. A spokesman says Ramaphosa will not quit and will seek a second term as leader of the governing African National Congress. The U.S. military reportedly tweaked the rocket launchers it gave to Ukraine to prevent rockets from being launched into Russia. U.S. officials told the Wall Street Journal the precaution is necessary to reduce the risk of a wider war. The Pentagon's not commenting, neither is Ukraine. New research co-authored by Federal Reserve Governor Lisa Cook found that black founders of U.S. startups raised just 1/3 as much venture capital to comparable businesses. The evidence shows that the financial gap dissipates in later stages of funding. Research suggests that investors' initially biased beliefs reverse as they learn more about black entrepreneurs' capabilities. And in North Carolina, more than 33,000 homes and businesses were still without power today after what was called an intentional attack on 2 electrical substations. Authorities say the substations in Moore County were damaged by gunfire. Federal officials have been growing concerned that the nation's power grid is vulnerable to terrorism. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Hyland. This is Bloomberg.
I'm John Oldham. Welcome to Bloomberg Markets.
And I'm Matt Miller in for Kriti Gupta today. Let's get a quick check at what's going on in markets. We are trading at session lows on the S&P right now. You can see us down at 4,006 right now, off about 1 2/3%. The U.S. 10-year yield up more than 10 basis points right now at 358.83. And we're seeing a little bit more strength in the dollar. Those two, the 10-year yield and a stronger dollar, are headwinds for risk assets. So as they move higher, if they increase from here, expect to see more pain in equities. Right now, NYMEX crude trading down almost 3% at 77.72 a barrel. So we do have a drop in crude, the drop in equities and a drop in crude, John, even as, at least this morning, we were looking at more openings in China. So it should have been risk on, and it looks like it's going the other direction.
Well, let's take a deeper look at some of the individual movers, Matt. You're right that the general tone at this hour has been largely negative. Most sectors impacted by that. There are some other reality checks. I mean, within the retail sector, you're already seeing weakness today for VF Corp as they once again are warning about their outlook and the CEO announcing his retirement. The other issue out there is valuations. A lot of stocks had rallied off their lows. You've got Deutsche Bank with cautious comments today on Starbucks because of its valuation. So those shares have been under pressure. What's interesting to watch is a couple of names that are still in the green but have come off their best levels. You've got United Airlines, which is getting a boost today. Morgan Stanley with some upbeat views on air travel heading into next year. It's still holding some gains, but it has pulled back a little bit. And then Alibaba has also pulled back along with some of the other Chinese listed companies in New York. To your point earlier, that was one of the early advantages of the morning, but now a bit more cautiousness across the board.
All right, so there's a look at some of the movers in these markets. After that U.S. ISM services data came out, we caught up with Mona Mahajan from Edward Jones, who says to expect some market volatility ahead.
We've had a very strong run in Q4 thus far. In fact, the Dow Jones was up nearly 20% since that September 30th period. So yes, we're headed towards a seasonally strong part of the year, but perhaps some of that was front-loaded already. We're starting to see a bit of volatility, and keep in mind, in years where there is a lot of tax loss harvesting, December can be a volatile period. But the Santa Claus rally that we typically refer to tends to be that last week in December, the first couple of days of January, and that, in our view, can be strong, especially if investors are positioning for the year ahead.
Well, let's talk a little bit more about the year ahead and this volatility we're seeing. Stephen Parker, kind enough to join us, head of advisory solutions at JP Morgan Private Bank. Stephen, I just want to start with the headline of jitters tied to higher rates. I mean, we're at the point now where investors have to consider where the economy is going with those higher rates. I know you've been thinking about the recessionary outlook, but is it worth also asking the question of what kind of recession we might be staring at right now?
Yeah, clearly what we're seeing now in some of the sell-off today is the reaction to stronger economic data, higher rates. We're clearly at a point now where good economic news is being viewed as bad for markets because it could keep the Fed more active than expected. We, in our base case for next year, think we are likely headed for a recession here in the U.S. We think it's likely to be a mild recession and not a deep recession. And ultimately, we think a lot of that pain is probably already priced in as long as we do get that mild recession outlook. What's important to remember is that typically equity markets bottom 6 to 9 months ahead of an actual recession. And so right now is the time you want to start thinking about the outlook for the year ahead.
Did you hear Larry Summers with David Weston last week? He was comparing either inflation coming back to normal or the Fed getting to a terminal rate with an airplane that's late. You know, it was supposed to be there at 8:30. They said 9:30. They said 10:30. You don't really expect it to leave until at least noon, right? Which I think is a great analogy. With that said, what kind of terminal rate are you working with? I mean, 5%, 5.5%? We're almost there now.
We are. And markets are already pricing that. We're in the 5% camp as sort of a base case in terms of terminal. Maybe it skews a little bit to the upside if some of the strength in labor markets remains as persistent as it seems to be.
Which has been huge. How does that turn around? Like slowly or instantly?
It's not going to be instant. I think it's going to be slow, but you are seeing signs from a lot of the headlines around layoffs, and I think that's going to lead to more challenging sentiment, which could finally lead to some of the release of pressure in labor markets. Ultimately, I think there's enough signs from the Fed that they're not going to have to over-tighten. But when you look at a reaction like we saw on Friday, which was tighter labor markets from the jobs data, but markets basically shrugged it off, that makes the Fed's job a little bit harder. And that's what I think markets are worried about today.
One of the other considerations, Stephen, I mean, with different asset classes, I mean, you're talking about layoffs, and we were showing what's happening with the NASDAQ. Tech has been the easy target throughout all of this uncertainty. A lot of investors seeking some safety have gravitated towards the U.S. dollar for months and months and months. But again, looking ahead, what are some of the trends that you're mapping in for 2023?
Yeah, we're actually really positive just on traditional core fixed income. It pains me to say it a little bit as a person who's invested in equities for my entire career, but I think bonds, particularly higher quality bonds, are really compelling right now. When you think about it from the perspective of an investor, you always want multiple ways to win. When you look at fixed income markets right now, if we do get an easing of inflation concerns, the Fed takes their foot off the brakes a little bit, that should be good for bonds. If we do get a slowdown in the economy, if we get concerns about a recession, that should be good for bonds. The scenario that's worst for traditional fixed income is that inflation remains persistent, the Fed has to keep going, but the good news is, unlike for much of the last decade, rates today give you a much bigger cushion to be able to ride that out. So core fixed income, high quality as a diversifier and a return deliverer in your portfolio is something we're really focused on.
It's got to be high quality, right? Because if we do get a deep recession, then maybe you start to see failures pick up.
We do, and when you're looking at traditional high yield markets right now, we're not pricing in as much of that recession risk, that default risk, as you traditionally have seen in prior cycles. So we're focused more on high quality, and with the re-rating that we've seen in yields, you can actually get really compelling returns without having to take too much risk.
And Stephen, just to build on what you're talking about, give us your sense on where gold fits into the picture heading into next year.
Yeah, I mean, gold's a tricky one, right? You know, depending on the point in the cycle, sometimes it's a dollar play, sometimes it's a geopolitical diversifier. We tend to have an allocation within our portfolio to help diversify, because it's one of those things that tends to be lower correlated, even in markets like this year where everything seems to be moving down together. One of the views that we do have is we do think the dollar is going to weaken over the next 12 months, but also over the longer term. So weaker dollar should be supportive of commodity prices and gold. And for investors who are thinking about how to build their commodity allocation within their portfolios, we've seen a huge run in energy markets. Now is a time that you can potentially diversify a little bit into places like gold.
All right, very cool, very interesting stuff. Thanks so much for joining us, Stephen. Stephen Parker there, Head of Advisory Solutions at JP Morgan. Let's turn now to China, which is seeing stocks climb as more cities begin to relax their COVID restrictions. Joining us to talk about this is Tom Orlik, Chief Economist for Bloomberg Economics. So Tom, tell us first about the specifics that we've seen here in terms of what's being relaxed and what tells you that, China's going to continue on that trajectory.
So expectations heading into 2023 were that China was going to move at a gradual pace towards easing COVID-0 restrictions, probably with the bulk of the moves concentrated after the winter was over and after a key political meeting in March of next year. What's happened in the last few days is that China's policymakers, responding in part to popular protests, have just moved much more quickly. So we had Sun Chunlan, China's kind of anti-COVID czar, signaling last week that China was in a new phase in their fight against the virus. And then in the last few days, we've had a wave of cities relaxing controls, saying, you know what, you don't need a COVID test to come out in public anymore. You don't need a COVID test in order to go about your daily life. Now, there's a big challenge still to come. The experience around the world is that when you relax restrictions, you see cases rising, and sadly, when cases rise, the inevitable consequence of that is illness and deaths rise as well. That hasn't happened yet in China. Very likely it will. We don't know how Beijing will react. The early signs, though, is that China is doing what economists and what the markets want them to do, opening up. We're seeing that reflected in the strong markets over there.
And then, Tom, can you give us a sense on the economic side? On the one hand, to your point, the market getting a little bit more optimistic on the reopening, but at a time when we're talking about markets around the world that are quickly cooling down and how that ends up sort of balancing things out.
So China has really been in its own COVID cycle, which has been substantially different from that experienced by the rest of the world. The rest of the world, the United States and Europe, locked down in 2020, but by the second half of that year, they were already opening up. They're now dealing with a very different set of problems: high inflation, aggressive central bank tightening. China, by keeping COVID-0 in place, not just in 2020 and 2021, but way into 2022 as well, has really put themselves in a kind of very different situation. And so I think when we're thinking about the China markets, we really need to think about primarily about the COVID-0 story and the end of COVID-0, as well as what's happening in property, of course, and what's happening with global demand. But it's not really a surprise to me that where in the US we've got markets focused on inflation and the Fed, in China the focus is rather different.
And do we see, Tom, the Chinese government starting to really juice the economy? Do you see a lot of stimulus coming in, or are they going to just ride it out?
So it's interesting, Matt. You recall we had the Party Congress in October where Xi Jinping got a third term as General Secretary of the Communist Party, and a bunch of folks who were mainly notable for their personal loyalty to Xi got top jobs in the Standing Committee. And at that point, the market sold off and said, this is terrible, this is kind of a massive looming governance failure for China. But if we think about what's happened since then, well, China's moved earlier than expected to ease COVID-0 restrictions. To your question on stimulus, they've amped up support for the property sector. And of course, Xi and Biden sat down in Bali and kind of shook hands and smiled and put a bit of a floor under declining US-China relationships. So we'll see what happens in terms of stimulus in 2023. We think the PBOC will do a bit on rate cuts, but remain constrained by concern about weakness of the Chinese currency, the yuan. But on those big policy issues, what to do about COVID-0, what to do about property, how to rebalance or reset US-China relations. Early signs following that party congress in October, a bit more positive than I think people expected back then.
Helpful analysis as always, Tom. Thanks for your time today. Tom Orlik of the Bloomberg Economics team on the road ahead for China. Coming up, Credit Suisse may get a $500 million cash infusion from its planned investment bank spinoff from Saudi Arabia. We'll get the latest details next. This is Bloomberg.
Of your babies. I don't know if I'm asking you to choose amongst your children, but you know, some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city, it's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg. I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto. The people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg is live from the Goldman Sachs U.S. Financial Services Conference in New York City, speaking with industry leaders, including an exclusive interview with David Solomon. Bloomberg Television and Radio, your global business authority.
This is Bloomberg Markets. I'm Matt Miller with John Ehrlichman. Kriti Gupta is out today. Now, Saudi Arabian Crown Prince Mohammed bin Salman is considering a $500 million investment in Credit Suisse's planned investment bank spinoff. That's according to people with knowledge of the matter who declined to be identified. Joining us now is Bloomberg's Shonali Basak with the details. So, this isn't hugely surprising considering the fact that the Saudi Arabian Wealth Fund is going to take a 9.9% stake in Credit Suisse, right?
There's a lot of elements here where you're seeing different entities tied to Saudi Arabia invest in different parts of the Credit Suisse plan. So we do see the Saudi National Bank investing in part of the plan. And the interesting thing here is this investment is as it pertains to the spin out of the investment bank over time. Now, Credit Suisse is going to capitalize that until this is spun out in a a larger way. They keep a relationship, but as you see, knowing where some of this money comes from is very welcome news to investors. After a sharp sell-off in the stock, you are seeing a little bit of gains now again off the back of this news.
And for the Crown Prince, Shanali, I mean, there has been a very big plan to invest money in a lot of different areas around the globe, which is another consideration of this possible deal coming together.
It certainly is, John. Something interesting that people don't realize about Credit Suisse's investment bank in particular is that not only does it have a fairly significant U.S. presence when it comes to leveraged loans, the relationship to the private equity industry, but it has a very massive presence in Asia. A lot of that was historically tied to the wealth business as it pertains to Credit Suisse and the work they did together on capital raising and whatnot when it comes to, for example, Chinese IPOs, business that has not been as robust, of course, for many reasons in the last couple of years, but they do have the infrastructure there to pick up as it comes up again. It's a pretty rare chance to invest in an investment bank from scratch here, especially something that is kind of a focused, more independent-like investment bank. A lot of questions still here about the plan, but to the point you're making for Saudi Arabia, the reason here is a very global play.
Now, we can't not talk about the fact that the Crown Prince has been alleged by the CIA, at least, of capturing and dismembering the journalist Jamal Khashoggi. Does Credit Suisse have any kind of issue with that we know of? Would that be a problem for them to work with that kind of investor?
Not that we know of, especially because, as we know, they are working with many parts of the kingdom right now. And also, remember, Michael Klein, who is supposed to be the head of this investment banking unit here, he's done a lot of work with Saudi Arabia and the Crown Prince over many, 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 many years. So the ties here go back as far as anybody on Wall Street. And you could argue that he is one of the top bankers to the kingdom as it exists today.
And just because of the different potential structures of how this gets done, Shanali, it seems, based on a lot of Bloomberg reporting so far, that they're still going to potentially need some time to figure this all out.
Some time is almost an understatement, John. It might take years to absolutely figure this out. And they've been pretty clear about that. This is not something you're going to see tomorrow or even necessarily next year. They have different capital raising plans, and I think it will be really interesting to see how they actually change the business to prepare this business, especially with those questions about the existing links that we'll have between Credit Suisse and this investment bank. Remember, when it comes to equity capital markets, for example, sales and trading is staying at Credit Suisse. It's not going with this investment bank. So they will have links moving forward, and that will take a while to clear up.
So the bank, though, Credit Suisse looks like it's almost done with a $4 billion capital raise, right? And they're getting more investments like this, at least reportedly. Are we past the existential question of, does Credit Suisse survive the missteps with Greensill and Archegos?
I don't think that we're ever out of the woods when we're heading into what's potentially a recession or a deeper recession in Europe and the competitive landscape we're in. So I think it's a situation you have to watch very, very, very closely. If you look at the stock price, investors wouldn't say they're out of the woods. But more significant updates will come into next year, into February of next year as they report earnings.
Helpful context, Shanali. Thanks very much. As always, Bloomberg Shanali Basak will continue to watch the headlines on that potential deal. Coming up, a key part of the Canadian yield curve reaching new levels, and we'll find out what it means potentially for a key decision on interest rates in Canada later this week. Next, this is Bloomberg.
Incredibly difficult for all types of companies to find employees lately. Many people with disabilities who aren't working could be working if only given a job. About 20% of people with disabilities are employed.
Right now, we're in an environment where there is a war on talent out in the marketplace. Every employer out there is struggling to find people to come into their shops and to find good, hard-working, dedicated employees. We have found through this program and other ones like it that we have within the organization that these individuals are looking for meaningful employment.
People with disabilities want to be able to live, work, and recreate in the community the same as everybody else.
Many of us identify ourselves right away by our job title. That's an important part of our image of ourselves. So that's true for all of us, whether or not you have a disability.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets. I'm John Ehrlichman with Matt Miller. Time now for today's For What It's Worth. Our number 100 is in 100 basis points. That was the spread reached today between 10-year and 2-year debt in Canada. That key part of the yield curve, now its steepest inversion since the early 1990s, a possible recession flag for Canada's economy. And Matt, something that the Bank of Canada is likely going to be watching as it gets ready for its final interest rate decision of the year that is coming this week on Wednesday.
Yeah, absolutely. These kind of inversions are being seen around the world. Here we're looking at, I think, about 75 basis points between the 2-year and the 10-year, but 100 is a nice big round number. And the question is, what kind of recession will you see rather than will you get a recession at all, right?
Absolutely. And for an economy like the Canadian economy, they're so deeply tied to housing. With each additional interest rate hike, this has become a sensitivity story. So do they go 25 basis points as a cautionary move? We're going to find out later this week. But you're right, Matt, as we look at the markets today, we're seeing that broader weakness out there on the continued worries around the interest rate story. So we'll continue to watch what's happening in the overall trading. For Matt Miller, I'm John Ehrlichman. This is Bloomberg.
Modern life consists in large part of entries in databases. If you have money, what you have is an entry in your bank's database saying how much money is there. If you have a share of stock, what you have is generally an entry on a list kept by the company or by some financial intermediary. You have to trust the keepers of the databases. What if we updated these databases? If we rewrote them from scratch in modern computer languages, using modern software engineering principles, with the goal of making them interact with one another seamlessly? If you did that, it would be almost like having one database, the database of life. You could send money in exchange.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everyone. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and on Bloomberg Quick Take. Yep, it is Monday, December 5th, 2022. Carol Masser along with Tim Stenovic, and it's definitely a risk-off trade today, Tim.
Yeah, stock's down, and we're actually getting to new lows, down 1.9% on the S&P, but the NASDAQ taking the brunt of it, down more than 2%, Carol.
95% of S&P 500 stocks, they are lower. We're going to get into the trade in just a moment. Also ahead, several of our most read stories on the Bloomberg today, including Credit Suisse shares. They are up as the Saudi Crown Prince, we're talking about MBS, weighing a possible investment. A lot of intrigue around this one.
All right, and speaking of initials, the ex-tabloid reporter who coined the ESG label says that the recent backlash is actually good. He says, bring it on.
I love this. I love this. We're also going to talk about the Citi CEO whisperer that's nudging Wall Street into political minefields. And then we've got an update on high-end residential properties in Manhattan.
And then let's talk athleisure. We got Joe Kudla back with us. You might remember him. He joined us a few months ago. He's the founder of the active apparel company Viore on what we are wearing post-pandemic. I also want to get a read on the holidays from him.
Yeah, it's a really good point. Like, how did Black Friday go? All right, we've got it all covered on this Monday. First up, though, let's begin with a check on that trading day, because Charlie Pellet, we've got stocks at our lows of the session.
Indeed. Let's get right to the numbers, Carol. We've got the Dow down 537 points right now, with a decline of 1.6%. The S&P down 80, down 2%. NASDAQ down 245, a decline there of 2.1%. The NASDAQ 100 index down 2%, while the Russell 2000 is lower now by 2.8%. 10-year yield 3.60%, with the 2-year yielding 4.37%. Gold is down 1.7%, 17.67 the ounce, and West Texas Intermediate crude down now by 2.8%, 77.71 a barrel. So stocks have kicked off the new trading week with losses. Bond yields are climbing as a services gauge rose unexpectedly, fueling speculation the Fed will keep its policy tight to fight stubborn inflation. As for the market outlook and the Federal Reserve, Rebecca Patterson is Chief Investment Strategist at Bridgewater Associates.
We continue to believe that there's another shoe that has to drop, and that is the economy. It's resilient today still, with the exception of housing, but we think the Fed is going to have to push demand lower to get that wage inflation down, and they're not likely to ease next year.
Another key departure at Salesforce.com. The stock right now is down 7.9%. Stuart Butterfield, CEO of Salesforce's Slack, is leaving the company. Another blow to the software giant that has seen an exodus of executives recently. Recapping, stocks are trading lower, with the S&P down 79, down now by 2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. All right, let's get more on the trade. Let's get to the market drivers report. Let's set your business week agenda on. Yeah, it's another busy Monday, everybody. And let's get to the market trade, because it is a risk-off, broad-based selling kind of trade when it comes to the equity markets. Abigail Doolittle, she's in the house, markets reporter at Bloomberg News in our Interactive Brokers studio. All right, a lot to get to. So let's talk about the trade. It does feel like everyone's selling today.
Yeah, it does feel that way, and the selling is accelerating right now. The S&P 500 almost down 2%. Earlier, gains had been minimal. Now, the real impetus for this selling, or it seems, was that ISM report, services coming out at 10 a.m., coming higher than the estimate, above 56, well above the contraction level, suggesting that at least that one part of the economy, I wouldn't call it hot, but I would call it very, very solid. And that, of course, means that maybe the Fed has more work to do in terms of cooling the economy. And if you recall, a lot of economists, in terms of the recession, one reason that they think that we're not in a recession is because of the strength of the services. Well, here we're seeing it. And then we, of course, have United Airlines today or over the weekend talking about how next year could be one of the best travel years ever. Services, or a piece of services, travel, to come off of that. So maybe the Fed does have more work.
I mean, in other news, or like another way of putting this, Abigail, is essentially this number is what the Fed does not want to see. It's the opposite of what they want to see.
I don't know if the Fed thinks about it that way. I guess I would put it into the words that a lot of people don't like to hear, but good news is bad news. Whether or not, on some level, Maybe you're correct, because we have heard Fed Chair Jay Powell talk about the fact that, or at least my interpretation of hearing him a couple of times, is that they're willing to sacrifice the economy to fight this super high inflation. And if you have services at ISM very strong in the month of October, going into the year end, suggesting that maybe you're going to see some solid holiday spending as well, yeah, that their fight has to continue. And not surprisingly, yields higher. Now, one point I want to make, so we do have yields up more than 10 bips, but that 10-year yield, it's at 3.59. That doesn't seem so high to me relative to the above 4. Yeah.
Yeah.
So.
Well, okay, Carol, can I just jump in real quick, because we got a little bit extra time with Abigail today, so I'm looking forward to that. I guess my question is about what this number specifically says about the Fed and its fight against inflation, because we know that December is going to be 50 basis points. So does this now mean higher for longer? Does it mean that we potentially don't see a step down of more than 50 basis points at the raise come February, at the meeting come February? I mean, help us understand what this means in the context of what we heard from the Fed chair last week.
So my interpretation of the Fed so far and what the Fed chair said last week is nothing new. I think that they are much more hawkish than a lot of people think. I think that they're going to do everything that they can to bring down inflation. We are going from the best, my ability to determine, from a highly accommodative system for more than a decade to one where liquidity is now coming out, that balance sheet around 8.5 trillion. The Fed has said over and over, even if Jay Powell, massaged the message, for a lack of a better way to put it, last week to try to soften the blow, but a higher terminal rate. The pace may come in a little bit, but at the end of the day, I love quotes, as you all know, and one of them that comes to mind, maybe from Lao Tzu, I'm not even sure if I'm saying that right, but the Chinese philosopher, the walk of 1,000 miles starts with one step. So many steps in this walk, who knows how long and high we could be doing the rate hikes. And I believe that there's a better than 50-50 chance February is 50 bips at this point. So if we go into now a series of 50 bips, that's certainly not dovish. I mean, it might not be as hawkish as 75, but nonetheless, I think this Fed's serious.
Well, and I think what's interesting about it is, it's kind of good and bad for the Fed, right? It says the Fed is trying to engineer a soft landing. So it's good to see the economy not falling apart. At the same time, it does show price pressure continuing, right? And this is the conundrum I feel like the Fed is constantly in, trying to balance those two.
Great point. And in some ways, I almost think that that's why my reaction to Tim was like, I'm not sure if it's bad news to them, because at the end of the day, even though they've said that they're willing to sacrifice the economy, I mean, who really, like, if you're a mastermind of the financial system, who really wants to see the economy fall apart? But to your point, yes, maybe this is a piece of the soft landing.
One last thing I want to ask you. I know China is something we focus on a lot. The NASDAQ Golden Dragon China Index, which soared last week, actually little change, despite it seems like more easing to come in terms of COVID-0 issues out of China. I bring that up as I watch the commodity world and the commodity space. I know oil's lower today, but I feel like commodities are way down. I'm just trying to get a feel of the global economy. Good news out of China, could that be good for the U.S.?
It should be good news for the U.S., I would think, and it's so amazing. I mean, here's a stat. I'm pulling up a chart right now from the October low, that NASDAQ Golden Dragon Index, up 73%.
Huge.
Yes, huge. A huge move on the idea that the world's second largest economy is about to emerge from this COVID slumber.
Up 22% last week alone.
It's unbelievable. And that Billy stock, I think it's up 170% over this time period. I'm almost trading like casino-like meme stocks. But yes, it should be, in theory, a big influence, not just for the U.S., but the whole world and for commodities, because if they're the world's largest user of commodities, that should be good for oil. On the other hand, you have the Russian price cap coming in, OPEC Plus on hold right now, so many different factors, as always. But yeah, China stocks, and I believe a couple houses on Wall Street, I believe Morgan Stanley, one of them, saying buy these stocks.
Yeah, that's exactly right. And that's what I'm talking about at 3A today, Carol, with our friends from Bloomberg TV. Abigail, real quick, sticking on Chinese stocks, is it just that sentiment has shifted in the market today because they were up as much as 4.4% and now we're seeing them lower by 0.2%? Is that just because the overall mood shifted?
I think it's the yield move, that with yields higher, that traders, probably algorithms, are not buying them as much as they would be otherwise.
Okay.
If you look at the individual movers, some of them are higher. Baidu up 3.5%, Pinduoduo Duo up 2.3%. But I think that this is FOMO. Folks are afraid of missing out. And it's interesting, I will note, we keep talking about the 200-day moving average. This NASDAQ Golden Dragon Index right on it, earlier above it. This could be a sign.
Hold on, up 70% is a 200-day moving average.
Well,
that's kind of crazy, right?
But that's because it went
down so much, down 70% since the 2021 high.
Okay.
It's all perspective. Got to remember it fell off a cliff. Abigail Doolittle, thank you so much. Markets reporter at Bloomberg News here in our interactive brokers studio. All right, we're watching the markets. We're also watching one of the most read stories on the Bloomberg today, and it has to do with Credit Suisse specifically. Shares of Credit Suisse, we saw them move up on the prospect that Saudi Arabian Crown Prince Mohammed bin Salman will take a stake in the Swiss firm's planned investment bank spin-out, saying he may put about $500 billion into the vehicle. That's a lot of money. No, $500 million.
$500 million, yeah.
Yeah, $500 billion would be like a lot. $500 million into the vehicle. That's according to people familiar with the matter.
With more on this, let's bring in Bloomberg News Wall Street reporter Sonali Basak. She's here in the studio with us. So Sonali, what does our investing audience need to know about this? Because we did see shares rise as a result of the Crown Prince weighing this investment.
Remember, Credit Suisse had been under pressure for a while now when they had said that outflows from their wealth manager were rising at a faster pace. That made it complicated to really finance some of their restructuring as they're looking to raise capital here to finance that restructuring plan. Now we know that, according to people familiar with the matter, that the Crown Prince is considering an investment, as you say, of $500 million into the investment bank spinoff. Now, that is important because it helps to streamline Credit Suisse to be more focused on that wealth management business, less on the investment banking business that, as we know, globally has been going through a tough time, that is entering a tough period, and financing it and getting financing from it early on will help it start to separate from Credit Suisse as well as expand and become a standalone entity over time.
You know, Sonali, I feel like there's a lot of moving parts to it, and we've been covering the Credit Suisse story for some time, but when MBS gets involved in something specifically, is this, Saudi Arabia already involved in Credit Suisse, so is this a personal investment? What do we know? Or I guess we're still trying to figure some of this out.
We're trying to figure out what investment vehicle he will make this through.
Okay.
What we know is that there's separate Saudi Arabian entities aside from him that are investing in the bank's plan itself. Saudi National Bank, which is backed by the Sovereign Wealth Fund as well, is something that is currently already planned to invest in the Credit Suisse restructuring and overall capital raising plan here. But this is a separate unit now, and it again will be over time a separate entity.
I think, Sonali, a lot of people hear MBS still, and they think back to the murder of Jamal Khashoggi a few years ago, and they still associate him with what happened to that journalist from the Washington Post. How does that weigh on the way that banks, regardless of where they are or potential investments, view his money?
I think it's important to remember two things here, that it was not long until a lot of global banks, Credit Suisse and other banks included, went right back to Saudi Arabia within a year or two.
Right.
Initially, they
Really
started
good context,
to...
yeah. I remember that one year they were like, we're boycotting the country completely.
Correct. And they pretty immediately, within a year or so, went back to... And by the way, even the ones that did start to initially kind of step away from initial business with the nation, there are plenty of banks that did still do business there. And remember, with Credit Suisse in particular, the person who was slated to lead the investment bank as CEO is one of the biggest bankers globally to the kingdom. So he's somebody, you
Michael Klein?
Michael Klein, correct. And so it's no surprise here that Saudi Arabia and the Crown Prince himself would be involved in a plan when it comes to Credit Suisse. There's a second element of this, which is Credit Suisse is not an American bank. It is a Swiss bank. And by the way, the investment bank is even more not American. A lot of its business is in China and Asia. And so the politics globally weigh very differently when you're thinking about Credit Suisse and its relationship to Saudi Arabia.
Is it a political thing that we need to think about? I mean, obviously, what happened to Khashoggi, there's a lot of things we could go in a lot of different places. But I do think about, how does MBS view it? Is it just another investment? He's been interested in financials, I feel like, for a very, very long time
Very long
globally.
time.
So, is it just another investment that he wants to pay off, or is there something more in terms of leverage, especially in the investment banking world?
And I should say that even though we know that this is going to be a big global investment bank, that the headquarters is supposed to be in New York City.
Okay.
So actually, when this is spun off, it will be an American bank. So I should say that. But a lot but a lot of its business is going to be in Asia. So as far as politics goes and MBS and Saudi Arabia goes, think about it, maybe it's not the best way to put it, but I think about it almost like a money funnel. If you're Saudi Arabia and you're investing through an investment bank to then eventually, and we don't know how this will be structured, but in theory, you could help provide capital to a lot of deals and leverage loans and buyouts from private equity firms and other things if they decide to build out that leverage financing business at greater scale with capital like this.
MBS, not the only familiar name in this, investing reportedly alongside Bob Diamond. He's the former CEO of Barclays, this according to people with knowledge of the matter. What do we know about who else is involved?
Yeah, well, Bob Diamond's an interesting part of this deal. If he gets involved, it's because him and Michael Klein, that CEO, also go way back.
And Bob Diamond is an American, by the way.
Yeah, he sure is.
Yeah.
He works on Park Avenue. And so he, and Alex Merchant also has been investing in a lot of global financial institutions, particularly ones that are a little bit new age. But Michael Klein was a banker that helped Barclays and Lehman merge.
Okay.
And Bob Diamond was executive there as well. So they go back to very specific, large, transformative global financial deals.
So when when a story like this hits, and it's no surprise it's among the most read, and I was listening to some of the conversations, and I feel like so much of it was just about MBS, what his plan is, what his intent is. How do you, from someone who covers the financial sector so closely, the big banks, the big global banks, how do you think about it?
On one hand, there was a lot of questions about where the money would come from Credit Suisse.
Okay.
And also because the Saudi National Bank had already had exposure to part of the deal, there was a question about how much more will Saudi Arabia or the Crown Prince get involved, especially with Michael Klein at the helm like that. And remember, interestingly, I'll look real quick here on the terminal. If you go MA Go, you can see that on league table-wise, on mergers and acquisitions, Credit Suisse is still top 10. They're still high up there. They are doing better than Wells Fargo. And so it gives him real access to a significant investment bank on the globe.
Becomes a real player.
Yeah. 100%.
In addition to that, it also helps play into Saudi Arabia's move away from fossil fuels and from oil, something that they've been trying to do for years, right? Diversifying the economy, diversifying investment. So how should we read into it in that context, Sonali?
Yeah, this has been...
It's not tech by any means, which is, they've really tried to go hard into, but...
Yeah, and in many ways, financials are more stable than tech. Often they're very highly regulated. Often they're backstopped by certain governments. This investment bank is not going to be globally, systemically, financially important anymore. As a standalone investment bank, most likely, but they will still have rules and regulations that protect itself. I would also say valuations are looking pretty good here. And so things have sold off and things are being bought on the cheap.
Yeah, we're seeing the whole bank sector under pressure this week.
Credit Suisse is at 3 francs.
Yeah, that's pretty amazing. That's unbelievable. All right, we're going to leave it there. Sonali, thank you so much. Sonali Bosick, she's Wall Street reporter at Bloomberg News here in our interactive broker studio. In terms of the banking community, we're going to hear a lot from the big bank CEOs. Goldman Sachs is hosting an event. It kicks off tomorrow, and so we will be hearing from the likes of David Solomon.
I know someone who's going to be
Brian
there.
Moynihan. Sonali will be there.
She's going to be there.
And we will get a great clue of what's going on in that sector, the economy, the global economy, see if they have some thoughts on MBS's investment in Credit Suisse and so much more. All right, you are listening and watching Bloomberg Business Week on this Monday. Carol Massar, Tim Stanovic, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are holding at session lows now, with the Dow down 522 points, down 1.5%. The S&P 500 index is down 1.9% right now, lower by 78 points. And NASDAQ, the composite index, down 236 points, a drop right now of 2.1%. The 10-year yield, 3.60%. We have got the 2-year yielding 4.38%. Spot gold down 1.7%, 17.66 the ounce, while West Texas Intermediate crude is down 3.6%, 77.12 a barrel. So again, recapping, stocks lower, S&P 500 index down now by 2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, well, the extended Senate campaign in Georgia gives Democratic Senator Raphael Warnock and Republican challenger Herschel Walker really, Tim, a second chance to persuade voters to send them to Washington. So I feel like we need to know how the early voting is going, because a lot voted earlier, the polling, and really the impact of the outcome when it comes to Senate actions.
With more, Bloomberg TV and radio political news director Jody Schneider joins us from our Bloomberg 99.1 studio in Washington, D.C. She's got a preview of the Georgia Senate runoff election. Jody, good to have you with us. Okay, so hard to believe that, we're in Georgia for another runoff, but Democrats and Republicans have had a month to prepare for this. What do we know so far when it comes to the record-breaking turnout that we saw in early voting?
Yeah, well, the early voting, Tim, does tend to favor Democrats, but it usually does. So that's really the question, is whether Republicans can make it up at the polls tomorrow. And it's turnout. And I know we say that about every election, but this one we really mean it. It really is about turnout. About 200,000 presumably Republicans, Brian Kemp, the governor, got 200,000 more votes than the Senate candidate, wow, Republican Walker did. And so they need to make that up. If this is what happens tomorrow, they don't get enough Republican votes, and then Raphael Warnock gets a full term as a U.S. Senator. That really is it. And Brian Kemp knows that. He got plenty of people to show. He's really tried very hard to get Republicans out there. And this weekend did an interesting, there was a little bit of a trick almost, in that he barely mentioned Walker's name.
I mean, he's not trying that hard. Right, he's not trying that hard if he's barely mentioning Walker's name, right?
I think they saw the SNL skit.
It's a tactic. It's a tactic. No. I think this is really interesting. We've been talking to some Republicans about this and said the same thing. How hard is he trying? They said, because if you make it us versus them, that's how you'll get Republicans to show up. They're not necessarily going to show up for Herschel Walker.
Well, like I said, if you saw the SNL skit, they kind of locked Walker away because they were so afraid that he might say something that kind of just freaks out voters, even more Republican voters.
Right, and that is the tactic. The tactic has been to say, do you want a Republican senator do you want this to be a Republican in the U.S. Senate, or do you want it a Democrat? Do you want to hand them one more seat? That has really been Brian Kemp and the Republicans' tactic in this past month of trying to get Herschel Walker elected.
Jody,
interesting tactic, but an interesting race.
What does that one more seat mean potentially for Democrats?
Yeah, it does mean things. It means more. Everybody says, okay, sure, it's more. But what does one more get you? It gets you a couple things. One, it gets you insurance against people like Joe Manchin, right, who may not vote with your party, and therefore you need a little insurance. It gets you Kamala Harris not having to go to Capitol Hill so much to break ties, and gives you just a little bit more cushion. It gives you a cushion in negotiating because you have a little bit more room. It's not a lot. One seat is one seat, but it certainly gives you that cushion, especially with someone like Joe Manchin providing, really giving the Democrats so much trouble this past, these past couple of years, in that they couldn't count on any Republicans switching over, so then they had to go to Kamala Harris, and in some cases they couldn't get done what they wanted to do because of that vote. So
right, over the last 2 years, he was just incredibly important, both to Democrats and Republicans. Jody, hey, what does it mean for Republicans not to have Brian Kemp on the ballot or anyone else on the ballot to actually drive turnout here? Is that a disadvantage to Republicans, or is it a disadvantage to Democrats because, there's no Stacey Abrams on the ballot?
Yeah, it's a little bit on both sides. Special elections get you fewer voters, because there's less to go for, right? And specials are out of the regular loop of election cycle. You really have to make a special effort. So turnout is usually lower. I think in this case, though, not having Brian Kemp certainly hurts Republicans more than Stacey Abrams, not being at the top of the Democratic ticket, because they're basically, again, 200,000 more people voted for Brian Kemp than did Herschel Walker. So that shows you right there that there's fewer, Brian Kemp was very popular, and so he drove more. So the question is, can they make up for that? It's going to be really hard. So, but again, it's turnout. The Democrats have to turn out on their side, too. So everybody's, making their last-minute appeals and trying to get people out there, and that's what will really drive what we see as the results, which we may know tomorrow night, and we may not know tomorrow night.
Jody, that's what I wanted to ask you. How likely is it with so much early voting that it's not going to be something we'll know by the end of Tuesday, that it might be something into the wee hours of Wednesday or longer?
Yeah, it's probably 50-50 whether we'll know tomorrow night, but most people who study this are saying we will likely know on Wednesday if we don't know Tuesday night. Because this is the only race, right? And even though there were a lot of early votes and all that, it's not like, a regular election day where you have so many different races that the state folks are having to deal with. So it's unlikely that this will drag on and on and on, but we may not know tomorrow night. It may be Wednesday. We're discussing the results.
Jody, is there something too about the race in Georgia, ultimately the outcome, that even sets us up in a more specific way come the next presidential elections, which are now, less than 2 years away?
Who's counting, Carol?
Yeah,
I am.
Jody is.
We're already in that cycle. We're already there. We're already playing this game for 2024. Well, it's interesting because there are some people that say Georgia is one of the new swing states that Democrats have to win. It's not Iowa. It's not Ohio and Florida anymore. It's Georgia. It's Pennsylvania. It's Arizona or Nevada and Colorado, but Georgia's right in there. So Georgia has become, in some ways, very, very important. It used to be a reliable, Republican state. Then it shifted back to Democrats being able to win, and now it's really almost a swing state. So this is going to be important. And as we've seen, because of this rule with the 50%, having to get to 50%, you end up with runoffs. We have, consecutive times here. So it plays an outsized role that way as well.
Runoffs that end up costing quite a bit of money, given that, it's another month and it's such an important race for both Democrats and Republicans. We're speaking right now to Jody Schneider, political news director for Bloomberg Television and Radio. She's in our Bloomberg 99.1 studio in Washington, D.C. We should note a couple things here. The Warnock campaign is the biggest spender at $26.2 million, followed by Georgia Honor, a super PAC funded by Democratic leadership aligned with Senate Majority PAC at $22.1 million. This the most expensive race of the year, exceeding $45 million in ad spending. This according to Ad Impact, Carol.
Hey, Jody, one thing I want to also ask you, over the weekend, President Biden talked about South Carolina being the first go-round, if you will, primary when it comes to the presidential race. This was a state that was important to him last time around. What's the significance of that?
Yeah, well, first of all, historically, Iowa was first, right? Mm-hmm. Everyone had to go to Iowa, pay homage. But I think Iowa did a lot of damage to itself by not being able to know who won last time, as I'm sure you recall, 4 years ago. Mm-hmm. So I think that this will be telling. Of course, President Biden, for his own reasons, did very well in South Carolina, and Jim Clyburn, really helped deliver that state to him, which gave his campaign another boost that it needed to keep going. Had he not won South Carolina, we would be having very different conversations these days. We wouldn't necessarily be the president of the United States. So I think he personally wants to do it, but there's also a lot of talk that Iowa's time has come and gone, that it's an anachronism, this caucus, it bears outsized importance, and it has become a very Republican state. So the Democrats, it doesn't do them a whole lot of good to have their nominating caucus that be the first. Of course, there's a lot of discussion now. Maggie Hassan, who is, the senator from New Hampshire, is now saying, well, she doesn't like that. New Hampshire comes after Iowa. Why should South Carolina be first. And so we're going to see this, again, this is kind of an inside baseball game. We political wonks probably care about this more than others do. But being first is important. And it looks like the Democrats are heading much more to South Carolina than Iowa.
Well, those local economies also care about it because it's a big boost in terms of bringing in dollars. Everybody just
flying in their private jets to campaign there and stay in the restaurants and eat the local food.
Stay in
right?
hotels, exactly.
Yeah, the press too. Hey, Jody, before we let you go, are Republicans doing anything to shake up their nomination process, similar to what Democrats are considering?
It doesn't look like it at this stage, but once this gets in the water, maybe they'll look at it as well. So once things tend to shift, sometimes they shift both ways. But this has really been more on the Democrat side. One thing we'll note is all the reporters hate having to go, and the candidates I'm sure hate having to go to Iowa in January. But Michigan has moved up the list, and it's cold in Michigan. In
I was just going to say,
so we're not
Iowa or
getting rid
Michigan
of that
in January.
necessarily.
Pick your poison.
Yes.
Yeah. All right. The warm. Go south. Go warm. All right, Jody. Thank you so much, Jody Schneider. She's political news director at Bloomberg TV and Radio, joining us from our 99.1 studio, Bloomberg 99.1 studio, in the nation's capital. Quick check on the trading day, folks, and we're pretty much near our lows of the session. So that's down about 2% on the S&P 500. Dow Jones Industrial Average down about 1.6%, 554 points to the downside, and the Nasdaq, really the laggard, down 2.2% as we speak.
Russell 2000 down 2.9%, so really taking the brunt of it. Let's get to world and national news. Nancy Lyons in our 99.1 studio. Hey, Nance.
Thanks, Tim. Georgia's closely watched Senate race is in its final stages, as you've been hearing. Recent polling shows Democratic Senator Raphael Warnock has a narrow lead over Republican challenger Herschel Walker ahead of tomorrow's runoff. He's urging his supporters to show up.
Let's get this thing done one more time. God bless you, Athens, Georgia.
Herschel Walker is also sounding confident.
He's going to be former senator because it's time for him to go. And I'm going to tell you right now, don't let that door hit you in the right side as you walk out of the people's office. That's what we need to get to.
Early voting wrapped up in Georgia over the weekend with almost 2 million votes already in. Lori Smith, a website creator in Colorado who's willing to serve gay customers, is asking the U.S. Supreme Court to stop the state from requiring her to design their wedding websites. Bloomberg's Irv Chapman has more in today's arguments before the court.
Justice Elena Kagan asked Smith's lawyer, Kristen Wagoner, about a couple who asked for the same design she did previously for Mike and Mary, but this time it's Mike and Mark.
Clients are coming in and they're saying, we just want a standard website, no ideology.
There is ideology. She believes that same-sex weddings contradict Scripture.
Justice Brett Kavanaugh said the case might hinge on whether a web designer is a creative artist or no different from the caterer who is subject to anti-discrimination law. In Washington, Irv Chapman, Bloomberg Radio.
One of the original human stars of Sesame Street has died. Bob McGrath was 90.
Come on, it's a nice song.
Well, okay, but you start off.
All right, I'll start off. Well, now, who are the people in your neighborhood?
McGrath's family says he passed away peacefully at home. He had been a member of Sesame Street family for 50 years. At the World Cup, Croatia defeated Japan. Brazil leads South Korea. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Just about the lows of the day once again, with the Dow now down by 548 points, down 1.6%. The S&P down 83, a decline of 2%. Nasdaq down 254. The Nasdaq Composite Index now lower by 2.2%. Broad-based selling with the Nasdaq 100 Index down 2%. The Russell 2000 down now by 2.9%. 10-year yield 3.59%, with the 2-year yielding 4.38%. Stocks are falling, bond yields climbing after a services gauge rose unexpectedly, fueling speculation that the Federal Reserve will keep its policy tight to fight inflation. As for that inflation outlook, Mona Mahajan is senior investment strategist at Edward Jones.
When you look historically, when inflation starts to moderate, it does so pretty consistently, but it does take time, anywhere from 12 to 24 months, to return to trough levels. But if we do see this trend, maybe 3-4 prints in the right direction, we think the markets will very quickly then start to think about not only a Fed pause, but when they can start moving back to more neutral territory, which we think they'll start to signal by year end.
Rackspace Technology shares are plunging 12.1% after the company said a, quote, security incident is responsible for a service outage that began last Friday. Recapping, stocks selling off with the S&P, lows of the day now down by 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Bloomberg Business Week is brought to you by the Jewish Communal Fund. JCF's donor-advised fund is the smart, tax-efficient way to manage your philanthropy. Open a JCF fund now to lock in a 2022 tax deduction. Visit jcfny.org.
All right, Tim, I got to say, I've been looking forward to our next segment because it's about an organization that one of my nieces, Bethany, she's involved in it. She gave me a heads up about it over the summer, and it is called Chief. It's a $1.1 billion startup support group that is only for women executives.
Wait, does that mean that you, since you know Bethany, you can get into it, you can get off the waiting list, which is crazy long,
I
or
would not
you're not an
assume that.
executive?
I think you have to be at a certain level.
Okay. It is a $1.1 billion startup, as you mentioned. It's also the subject of a story in the upcoming issue of Bloomberg Business Week, reported by Bloomberg News managing diversity reporter Jeff Green, who's joining us right now on the phone from Michigan. Jeff, good to have you with us this afternoon. This is pretty incredible because we got more people on the wait list for Chief than we have as actual members of the organization. What exactly is it, and why is it attracting so much attention right now?
Yeah, it is kind of an interesting journey they were on. They started out as kind of like any other networking group with physical locations. Quickly had 1,000 people on their waiting list, basically right off the start with their one location in New York City. They started adding cities, and then the pandemic hit, which was not good news for pretty much anyone who relied on in-person networking. And they started kind of playing around with the model and decided ultimately to just make it a national kind of virtual model. And that made a huge difference for how the participation could happen. And I mean, the key thing here is that in addition to being a large organization with a lot of people, it's focused on very small groups called core groups that have about 10 members. And I think that's why you have 60,000 people wanting to get in, because they want to be part of these little groups, not necessarily the big group. I mean, the big group I'm sure is attractive too, but everything I hear, and I spent some time with some of the members, is this little group.
Well, and I want to get into that because, Jeff, I feel like it's when you're at a big conference and then you're invited to a special lunch or a breakout, right, where smaller members, where you actually have face-to-face time with some really prominent people. One thing I want to ask you, though, is I feel like, Jeff, there are so many women-only professional networks out there. It is that core group that makes this a little bit different, as well as being very senior people.
Yeah, and it's not just random. I mean, these are curated groups of 10 people that are all around the same level. This is not a mentor-mentee relationship. This is meant to be, these are people who will benefit as if they were all men on a board together in the same sort of way, women in a boardroom, except coming from a whole bunch of different companies. And that is the key here, is it's curated. It's also moderated. There's a professional who is there to kind of keep the conversation focused and help people to have sort of, topics to talk about and to keep things moving along.
So let's talk about the pandemic in the last couple of years, because as you mentioned, and you write in your story, that the pandemic wreaked havoc on organizations like this. You mentioned the Wing, that I think a lot of people here in New York were familiar with because it had physical spaces. And I don't know about you, Carol, but it was all over my Instagram feed a few years ago. I mean, everybody was going there. A women's only physical co-working space that offered some of the similar benefits that Jeff writes about, but again, different. How did Chief not only survive the pandemic, but thrive during it?
Well, I think part of the key was going virtual. I mean, the idea that the people who I talked to, in fact, who were I spent some time with 3 members of a core group over almost a year. We just kind of talked from time to time. And while we were, they had never met. I mean, one of them was in Philadelphia, 2 of them were in New York, but they had never met physically. They would only meet on this call. And I mean, from any hour of the night, from any location. One member kind of left a dinner for her daughter's softball banquet. Another would do it from Switzerland. I mean, this was like a very important way to kind of focus on this on very important topics.
So for those who are involved in it, what do they feel like they're getting out of it?
Well, I mean, for one of the people who we kind of featured, she's the CFO of Novacure. There are no women other than her in the C-suite, so she gets to be kind of in her own sort of specialized C-suite with a whole bunch of other people who are at the same level and can talk about what they bring to the table and how they would react to a specific situation. And they also will have certain activities that they kind of bring in as conversation starters that give them something to kind of like different ideas to test among themselves.
Hey, Jeff, Carol and I were at Stanford Graduate School of Business last week. We interviewed Mary Barra, and one of the questions that we asked her was, she's the only female executive of the big 3 automakers. And we asked her a question in the context of, okay, business school has gotten more diverse in terms of gender, but we haven't seen that translate.
On parity, in terms of like half men, half women getting their MBAs.
But we haven't seen that translate. So, Carol, I thought you asked a great question, which was, what's the right conversation that we need to be having about this? And my question for you, Jeff, is kind of similar to this. When do we start to see the organization that's happening sort of outside of the C-suite here really translate into numbers that show that women are actually getting a foothold in some of these biggest companies?
Yeah, well, part of the problem, and I've done some reporting on this, is the MBAs are not actually where they should be based on where the rest of the college education system is. Women still lag in the MBAs. It's only just recently we're starting to see parity. I think in the Business Week measure, there were 6 schools that had parity or better. So that is part of the problem, is it's kind of built into the system. But I mean, that is the question. It's like, okay, what's coming? Once you start to reach parity at the schools, how are you going to work that into the C-suite? People say it's a pipeline problem or whatever, but it's a prism problem. And I think that's what Chief is trying to basically solve, is finding all these people and putting them together so they can better leverage these opportunities. I mean, you really need to know that everyone is there. You need a different Rolodex. And that's what Chief is basically this really big, diverse Rolodex for women trying to figure out how to break into this system.
Jeff, we talk so much about, women having mentors or people who sponsor them, right? Sponsorship, how important this is. But I love that the difference, or at least one of the distinctions of Chief, is that it's really about getting practical help and advice. You put that in your story. And I think about women who come to me, and it's often, all right, how do you do this? How do you do that? Like, it's just like a how-to, and that's, I feel like, what it gets to that can be just so productive for women, certainly in the executive suite.
Yeah, I mean, think about the opportunity to war game a situation at your company with no one from your company in the room, but get the kind of input that you would get from people at that level. So you don't need to show any kind of weakness or anything you might be worried about doing in front of your peers at work, but you're basically talking to business peers about the situation and how they've handled it. So it kind of gives you like this, like kind of like, what happens in core group stays in core group kind of, confessional where they can work these things out.
All right, well, this story, it's in the upcoming new issue of Bloomberg Business Week, out later this week. It's already at Bloomberg.com/businessweek, and you can find it on the Bloomberg terminal. And our thanks to Bloomberg News Managing Diversity Reporter Jeff Green joining us on the phone from Michigan. Really relevant, and I feel like there is something about when you get down to a smaller group and getting advice, how much more productive that can be.
Yeah, it certainly sounds like it, and I appreciate that Jeff got to spend time with some of these individuals. What I want to know, Carol, is if they actually start to make a dent in this wait list, or if they grow, or if this thing just remains, really tough to get into.
Yeah, I was curious too, are there fees? Like, what are the membership fees? We didn't even get into.
Can you expense it?
Next time around. Maybe. I
Depends
don't
on
know.
where you work, I guess.
All right, you're listening and watching Bloomberg Business Week on this Monday. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet with a roundup now of the day's top business stories. Stuart Butterfield, CEO of Salesforce's Slack, is leaving the company, another blow to the software giant that has seen an exodus of executives recently. Shares of Salesforce.com, based in San Francisco, down now by 7.3%. Delta Airlines pilots will be getting at least 31% in pay hikes over the 4-year term of an agreement in principle reached with the carrier. The Airline Pilots Association says the tentative accord with $7.8 billion in total increased value will also provide a one-time payment to pilots. Airline stocks trading mix. Delta is up 0.3%. Rival American up by 0.5%. UAL shares, they're surging now by 2%, but trading in the red. Southwest down 1.3%. JetBlue down by 0.4%. Tesla shares are trading lower after Bloomberg News reported that the electric vehicle maker plans to lower production at its Shanghai factory. Tesla shares down now by 7%. Elon Musk, meanwhile, says Apple has, quote, fully resumed advertising on Twitter, further de-escalating a brewing war between two of the world's most influential technology companies. And Volkswagen has restarted production of the carmaker's automakers major sights in China after halting output during the latest COVID-related lockdowns. ADRs of Volkswagen, they are now trading unchanged at $19.29. And that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on this Monday. Carol Masser along with Tim Stenovic in our Bloomberg Interactive Brokers studio. It was interesting, Charlie, of course, talking about the airlines. You and I were flying. We were out west. Airlines, man, they are busy. We had mega delays on the way out. I had a great trip home. And can I just say, I'm not going to say who the airline was, but I was saying, wow, that wine is really, really great.
Okay, so what happened?
I'm watching a movie and like the flight attendant just slipped me a bottle of wine.
I've never heard of anything such as this happening.
I looked at her, I'm like, what? And she's like, shh.
Okay, well, this is...
It was a really good wine.
But this builds
Which
loyalty.
she thought they had delivered incorrectly.
You know what the hardest part about that is getting a bottle of wine past TSA.
No, it's on the way out.
Yeah, I know.
It's the way in.
That's the only way you got a wine is it's duty free.
It's like, honey, I'm home.
You know, it makes sense though. I think that these are the types of things that airlines are trying to do in a day when, you know, there's tons of competition, especially at the business level. So the next time you're going to book and you see, you know, multiple airlines for a business trip, like, are you going to think about that interaction that you had?
I'm going to look for the best flight.
Okay. and then if it's anything like what happened to us last week, that best flight will then get canceled or delayed, and we'll have to go.
Tim and I thought we were so
flight.
smart. We're like, oh man, our flight's like 2 hours behind, and we're like, flip to another flight, and then it was
different airline, different airport.
Yeah.
And then that one was even delayed more.
Yeah, it's okay.
So
It's the weather. I think it was. Hey, listen, just real quickly, Apple watching it. Stock's down about 1%. It's been all over the map today, about more than a 3.5% swing here. But Elon Musk saying Apple has, quote, fully resumed advertising on Twitter, further de-escalating a brewing war between two of the world's most influential tech companies. We know there's been a little bit of a spat back and forth between these two.
Yeah, spat is one way to put it. Musk blasted Apple last week, saying the maker of iPhones and Mac computers had mostly stopped advertising on Twitter, and it threatened to withhold the site from its app store. In taking aim at Apple, Musk risked a war with the world's most valuable company and a top advertiser at a time when other companies were pulling their advertising from Twitter.
Top advertiser equals revenues.
Yeah, that's true.
And a lot of advertising we know has left. We talked to Mary Barr, our CEO and chair of General Motors, about them pulling off of it, and she's watching the platform really closely. All right, you are listening and watching Bloomberg Business Week. Carol Masser along with Tim Stenovic.
All right, let's get to world and national news. Nancy Lyons in our D.C. newsroom. Hey, Nance.
Thanks, Tim. The Supreme Court heard arguments today on whether artists can be forced to do work that is against their faith. It's a case brought by a Christian graphic artist who objects to designing wedding websites for gay couples. It's the latest clash of religion and gay rights to be decided by the highest court. Well, the White House is holding a roundtable this week on anti-Semitism, and for the host, it is personal.
Vice President Kamala Harris's husband, Second Gentleman Doug Emhoff, will lead the discussion with Jewish leaders and other White House officials this Wednesday. It comes after recent anti-Jewish remarks from Ye, formerly known as Kanye West, and former President Donald Trump's dinner at his Mar-a-Lago home with the rapper and a white supremacist. Emhoff is the first Jewish person in the top 4 positions in the executive branch, president, vice president, and their spouses. He said the rise in anti-Semitism is painful and it hurts. In Washington, I'm Nathan Hager, Bloomberg Radio.
Jury deliberations are underway in the Trump Organization's tax fraud trial. New York prosecutors are accusing former President Trump's company of avoiding taxes by paying personal expenses for top executives and giving them compensation without reporting it. And the jury's still out in the sexual assault trial of Harvey Weinstein. The disgraced movie mogul faces 2 counts of rape and 5 of sexual assault involving 4 women, including the wife of Governor Gavin Newsom. The panel got the case on Friday. Croatia defeated Japan in a game that went to penalty kicks. Brazil leads South Korea. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Coming up, we're looking at Bloomberg's countdown to the close.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes ago in the trading session, Romain Bostic here, alongside Katie Greifeld, Carol Massar, and Tim Stenovic, joining us right now for our global simulcast, and we welcome our viewers across Bloomberg Television, radio, YouTube, and Quick Take. Market sentiment, Carol, before the bell was pretty strong. It looked like we were going to have an update on the back of China, and then, of course, we got some of that economic data, which seems to suggest...
Yeah, absolutely. And that's why when you're looking for some underperformance, you can definitely see it in the bank stocks. They are a worried sector. They're worried about the trajectory when it comes to Fed moves, how aggressive they will be, and ultimately, could the Fed push the U.S. economy into recession? The data today maybe says something otherwise when you look at the services sector, but nonetheless, the KBW Bank Index, we saw that down about 4.7%, 4.6% as we speak. Pick your big bank name, and they are down. JP Morgan's down about 3%. Goldman's down 2.6%. You've got B of A down almost 5% in today's trade. Keep in mind, tomorrow we're going to be hearing from the big bank CEOs at the Goldman Sachs Financial Services Conference, including everybody who's anybody in the big bank sector. Goldman Sachs' David Solomon, B of A's Brian Moynihan. So we will get some more indications of what's going on in the economy and how worried those big banks are, Tim.
Well, I got my eye on Chinese stocks that are listed here in the United States, those ADRs. It was a sign of outperformance. It still is outperforming, even though it is in the red. The NASDAQ Golden Dragon Index down about half a percentage point, but it was higher by as much as 4.5% a little earlier. They were rallying on optimism that Beijing is shifting away from its COVID zero strategy. The NASDAQ Golden Dragon Index up more than 70% from its October lows, 22% just in the last month alone, Romain.
I think the disparity that we're seeing today between what actually happened in China, meaning actual on the Hang Seng and some of the other indexes over there, and what we're seeing in the ADRs here, quite remarkable. And you take a look at the screen here for our television audience, down 2% on the S&P, 1.5% on the Dow, more than 2% on the NASDAQ, and about 3% on the Russell. And Katie, that's a huge flip from honestly where we were at the open. I mean, things were in the green. We got that ISM services data at 9:45, and that completely killed sentiment. A lot of people now looking at the Fed and saying that rate hike, or pace of rate hikes, excuse me, might actually be a little bit stronger than what they have priced in.
Can they afford to slow down? We're going to find out next week. But let's take a look at the sector level, because one thing that flipped today was the price of oil. We're back below $80 a barrel, rather. You're looking at $77 right now. You look at how that's translating through into the stocks. Energy is your worst performing sector today, off by more than 3%. Every single sector in the red right now. Utilities, the worst bad, but still down off about 0.7%. So a lot of broad-based selling that we're looking at.
Yeah, take a look at Tesla shares, which have been moving lower all day long, including in the pre-market on the back of that Bloomberg report that they are actually slowing production at their Shanghai factory, a report that a Shanghai news service called unfounded. And nevertheless, Tesla shares down 7% here on the day. Rackspace down about 13%, this on the back of a quote-unquote security incident. A lot of investors just bailing out of there as a precaution. But if you're looking for any bright spots, you're going to find it in the airlines, up about 2% on United Airlines on the back of an interesting upgrade here. The idea of a Goldilocks scenario for air travel in 2023, and then Credit Suisse, which actually rallied about 9% over in Switzerland on Friday, up about 3% over in Switzerland today. This on the back of a report about some more investor interest in that company and the rebound in that company. Meanwhile, of course, guys, a lot of folks were talking about Mike Wilson over at Morgan Stanley in his latest call. It's a bear call. Remember, just last week he was saying, well, the bear market rally still had some room to run. Today, basically saying, well, it might actually be over. He still has a price target of about 41.50 that could be reached, what he says, maybe in the next week or so. But according to him, that's pretty much it.
And therein lies the conundrum again, right? There you've got a bear call by Mike Wilson. We listened to him because he was really smart in terms of the call earlier this year. You've got United talking about things looking really good going into next year, trying to make sense of it. You had strong wage growth, right, in that Friday jobs report. You've got strong services data. But again, we see the recession talk coming out and people worried about the Fed overdoing it and slowing down the U.S. economy. So I do want to point out that Julie Beal, she's portfolio manager, senior research analyst over at Kane Anderson Rudnick. She was on with John Farrow earlier today. He talked to him a little bit about the conundrum that's out there and what this means for the Fed. Check it out.
we for sure reached the period of peak margins. We're seeing that across all of the earnings reports that happened in the last quarter or two. Broadly, the Chair Powell is really in a position where he can't ignore that strong wage growth and he has to take action against it. And so the idea that there's going to be a major pause or pivot, I think, is pretty unrealistic.
All right, so no pivot. Julie Beal over at Kane Anderson Rudnick.
Yeah.
I mean, and that's, I think that's what we hear from a lot of folks, that we don't anticipate any kind of pivot because we've got to bring down those inflationary pressures.
And just real quick, I think what's really representative of that are the moves that we've seen in the yield space today. And even on Friday, I mean, we're up something like 11, 12 basis points on a 2-year. So a market that had actually started to price down on that 2-year yield, now pricing it back up on basically exactly what you said and more importantly, what Beal said.
But longer term, right, that 10-year, you take a look at it, still staying well below 4%. So the concern is, right, that short-term duration right now.
Well, dare I ascribe the P word pivot to what we heard from Fed Chair Jay Powell last week, but if I recall correctly, it was just optimism, Katie, on a potential 50 basis point rate hike that we're going to see this month, which is, all but actually happened already. The question is what does February look like? And if we are going to see 50 basis point rate hikes be the norm, sort of the new 75, how many consecutive meetings do they do that at?
Yeah, it was interesting. If you looked at the market reaction, what was happening in the swaps market on Friday after that print? I know you guys were in California, but don't worry. I was looking at it. You didn't see bets move.
It's 5:30 in the morning in California when that print comes out?
You know what? I wasn't even thinking about that. I don't feel that bad for you. But in any case, we didn't see market pricing on 50 basis points this month change too much. It seems like that's a lock, but you saw expectations for the terminal rate move a little bit higher. So to your point, it's where do we go after December? Do we keep firing off 50 basis points, 25 basis points, but how long does the Fed ultimately keep hiking?
I would also point out, too, also to Tim's point, though, kind of a counter to that point, I should say, is that we saw break-even rates on both the short end, 2 years, and on the longer end, 10 years, continue to drift up for about 2 weeks, 2.5 weeks now. So there are expectations for inflation that I think are a lot higher than where they were, maybe, 3.5 weeks ago. So you do have a market adjusting to that possibility as well.
But it's a real conundrum for the Fed because on the one end, we start to get data that shows that financial conditions are indeed tightening. And then we get a jobs report that shows that, wage growth is high and that we're still seeing, more than 250K jobs added to this economy. And then services data like we got today that said, hey, things are coming in sort of hotter than expected. So the Fed still has so much more work to do.
David Solomon, Brian Moynihan, Roger Hochschild. I mean, we're going to get an idea from the big bank sector, right? How bad the financial market conditions are tightening and what it means maybe for the economy coming next year. That's at that Goldman Sachs conference tomorrow. We'll be all over it. All right, guys, we will be all over the markets.
Katie's really looking forward to that.
I'm psyched.
I'm psyched too, right? We'll get some good
All the heavy hitters.
Yes, exactly. All right, guys, we're going to be back in less than an hour's time. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Quick Take, we call it Beyond the Bell at 4 p.m. Wall Street time. We're going to catch you down to the close on this Monday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, yes, indeed, everybody. It is Bloomberg Business Week on Bloomberg Radio, live on Quick Take on YouTube. Carol Masser along with Tim Stenovic. And we talked about, really covering several of our most read stories on the Bloomberg today. And this is among them. It is about the big bank CEO whisperer who nudges Wall Street into political minefield. So we kind of wanted to get to the who, what, where, and why on this story.
I love stories like this. And we got Jenny Serrain with us. She's Bloomberg News finance reporter. She joins us via Zoom here in New York City. Sarah Wechter, Jenny, is the city CEO whisperer who you profile in this piece. She has just a fascinating story here, including some pivotal times in her life that it seems like really shaped her career. Why call her the CEO whisperer, though?
Yeah, I think fascinating is definitely the right word for it. I mean, she's been a key counselor to a roster of Citigroup's leaders, from Chairman Dick Parsons, Mike O'Neill. She then moved on to be chief of staff to former CEO Mike Corbat, and now is head of HR under CEO Jane Fraser. So she's really always been in the room, over the past decade or so, and really had a front row seat to a lot of the big changes at Citi in that time.
It's so interesting because I do feel like firms can have these individuals who talk to the C-suite and senior execs who are like, yeah. But she's actually certainly gotten their attention, right, and brought about some changes.
Yeah, no, I think that's exactly right. She's definitely not, shying away from some of the big culture war topics that we have come to pay close attention to. So she's put them kind of squarely in the crossfires on the return to work conversation. She led their vaccination drive where she required all employees to get vaccinated or face termination in the U.S.
What's the term you use? No jab, no...
Yeah, no jab, no job.
Okay, no jab, no job. There it is.
One of the strictest vaccination policies on Wall Street for sure. And now, more recently, she led the charge on their abortion policy and said, even if you live in a state where abortion access is restricted, we will pay for you to travel. And that really became a template that corporate America more broadly used. So you're seeing her influence beyond city now. She's really kind of her reach is far and wide across corporate America.
Jenny, what's kind of cool about her in terms of the overturning of Roe v. Wade is that she was early on, not waiting until everything was done, right? But seeing maybe where things were going and making city start to think about policy and what they could do to assuage any concerns among their employee base, particularly their female employee base.
Yeah, no, that's exactly right. So, through my reporting, I learned that it's actually it was months and months ago that they started to hear from folks, long before the Supreme Court had even decided to take up Roe v. Wade. And so, she was listening to that and saying to her top deputies, what do we do? And so they came up with this policy and actually enacted it last year. It didn't ultimately make, national headlines until earlier this year when we really saw that Roe v. Wade was in the crosshairs. But it was really interesting that this was long before it was really on anyone's radar. She was hearing from folks, in places like Texas, in places like Missouri, in places like Ohio, where city has these huge employee bases. And she really has kind of her finger on the pulse there.
Hey, Jenny, it seems like there was this pivotal moment in her career when she had to essentially tell the chairman of the bank, of the board, Richard Parsons, whom she describes as, quote, scary, that she was pregnant with twins. You have a wonderful anecdote here about an email that she drafts with Jane Fraser. What happened?
Yeah, no, she found out she was pregnant right in the process of applying for the chief of staff job under then chairman Dick Parsons. And she'd actually come into that with, a recommendation from Jane Fraser, who was already very senior at the company. And then she finds out she's pregnant. And so she's, spending weeks kind of thinking about, how do I tell him? I don't want him to, accept me for this role, not knowing that I'm going to have to be on maternity leave very soon. And so she actually ends up walking into his office and he already starts giving her all these things to do. And she realizes, oh my gosh, he never read this email where I told him, I'm pregnant. And it was very, I think, heartwarming, actually, when she finishes her long speech about her situation. And he says, listen, this is my grandson, Jack. We do kids well. I think that was very formative for her, at least in her telling. It shows that how an employer reacts to a situation like that really does matter and really does change the trajectory of someone's career. So it definitely is something I think, you can see it in the way she manages the HR team now, and kind of what she values.
Jenny, a quote in your story from Dick Parsons really jumped out for me. He said this about her: she wasn't trained like the classic HR person who gets more focused, frankly, on process and procedure and specifics like that. Her orientation would be, how do we get the right kind of leadership? There does seem to sound like there was something in the special sauce at City's C-suite, though, that was very receptive to somebody who was looking to stir the pot. As you say, HR is often about, let's get rid of the drama. She had no problem kind of stirring it up.
Yeah, no, I think that's exactly right. And I do think it's a good point. It's and she actually made that point a lot when I interviewed her, that she had this, roster of leaders above her, from Mike Corbat, Jane Fraser, Dick Parsons, who did care about what she thought. And she wasn't just, a filler person in the room. They listened to her and looked to her. And so, yeah, that's why we deemed her the CEO whisperer, because she really is someone that has their ear. And I think that's a mix of both who she is and who she is as leader, and also them, being willing to listen to someone who's much younger and took a very different path up through the bank.
Well, wait, what, for a moment? Since her 20s, she seems like she's been getting the attention of everybody. I said we were going to say who, what, where, and why. Who is she, right? What is it about? Because she wasn't like your typical Wall Streeter, was she?
No, and I actually also think that really does, impact how she approaches this. But yeah, she grew up in suburban New Jersey. She went to college in Atlanta. She did, start out in the investment bank and was already kind of in rooms with CEOs of banks that they're advising, obviously. But no, she took a very unique path, and I think just really hit it off with some of the key leaders at the bank, and yeah, had a really interesting trajectory and career.
You shared with us already, Jenny, how she has had an impact on the bank from the perspective of what they've done with Roe v. Wade, and then essentially the industry followed, or the reaction to Roe v. Wade, I should say. What about fitting this into the broader context of what's going on at Citi right now? And, a year ago, if we were talking about this, we'd be talking about the talent wars and how Citi's competing with the other big banks to attract and retain talent. But we're kind of in a different place right now when you have, Citi stock down, more than 20%. It underperforms the S&P. It's underperformed the financial services index as well. How does she fit into the context of what's happening at Citi right now?
No, I think that's actually a really important point. When Jane took over last year, Jane Fraser, she said at the very beginning of her tenure, culture is one of the big things she's setting out to change. And she has said she's focused on establishing a culture of excellency and making sure that every employee feels accountable for kind of fixing what